hits. We are now welcoming the dignitaries to the Invest Sri Lanka Capital Market Investor Forum 2025 by a Kandyan dancing procession. A very good morning and a very warm welcome to the dignitaries and all the guests who are present here today to Invest Lanka Capital Market Investor Forum 2025. And to commence the ceremony, ladies and gentlemen, let us all rise to sing the national anthem of Sri Lanka.
Sri Lanka Mata, Abba Sri Lanka, Namo 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 Mata, Sundara Sri Darini, Surani Ati Sobhamana Lanka.
Thank you. Please be seated.
Sri Lanka, a gem nestled in the Indian Ocean, radiates unparalleled beauty through its lush landscapes, golden beaches, and mist-covered mountains. The island's diversity is reflected not only in its natural wonders, but also in its vibrant cultures. Today, Sri Lanka is a testament to resilience. With a population of over 23 million, the country has emerged stronger through collaboration and innovation. Now it is rapidly advancing, transforming into a thriving hub of economic growth and infrastructure development, buzzing with energy and promise for the future. Tourism, tea export, apparel, and agriculture remain key pillars of Sri Lanka's economy. With a rapidly growing educated workforce, these sectors have surged, driving substantial growth and supporting local livelihoods. Together, they fuel the nation's development, positioning Sri Lanka as a rising economic force in the region. True to its global reputation, Sri Lanka was ranked among the top 10 best travel destinations of 2025 by the BBC. Beyond tourism, Sri Lanka's export capacity is thriving. With 13 export processing zones and 2 deep-sea ports, the nation is streamlining production and expanding market access, attracting international investments that accelerate economic growth. At the heart of Colombo, Port City is redefining the nation's financial and commercial landscape. Designed as a regional business hub, it integrates world-class infrastructure with investment-friendly policies, making Sri Lanka a prime destination for global enterprises in finance, real estate, and tourism. Sri Lanka's economic resurgence has gained global attention, driven by bold policy reforms and large-scale transformative development projects. The completion of Sri Lanka's international bond restructuring has significantly improved the sovereign credit rating, reducing default risk and instilling confidence in new issuances. Alongside these financial advancements, the nation is steadily moving towards greater stability in governance and policy making, fostering a more predictable and business-friendly environment. This renewed confidence has sparked a wave of both foreign and domestic investments, reinforcing Sri Lanka's position as an emerging financial investment. A strategic shift towards an export-driven growth model is fostering competitiveness, sustainability, and long-term resilience. Key investments in technology, renewable energy, and innovation are propelling Sri Lanka toward an economic renaissance, with a projected 5.6% GDP growth in 2025. At the heart of this transformation, Sri Lanka's capital markets are surging ahead, with the Colombo Stock Exchange emerging as a critical driver of economic evolution. The stock market's momentum has been nothing short of remarkable in 2024, with the all-share price index marking a 49.7% year-on-year growth, making it the second highest growth market in the South Asia region. Meanwhile, the S&P SL20 soared by an extraordinary 58.5%, reflecting an unprecedented surge in investor confidence. With a market PE ratio of 8.29 in 2025, Sri Lanka's stock market is notably undervalued compared to its regional peers. This offers an attractive opportunity for investors looking to capitalize on potential growth and value. It is a market poised for significant expansion, presenting a unique window of opportunity. Sri Lanka is not just adapting to global trends, it is setting them. As the island strengthens its infrastructure and cultivates a pro-business ecosystem, it has become an undeniable magnet for international trade and investment. With a bold economic vision underpinned by fiscal discipline, transparency, and sustainable progress, Sri Lanka is forging ahead as a rising force in the global economy. The nation's share of global trade may currently stand at 0.1%, but its trajectory is unmistakable. And so is its expansion, innovation, and leadership. The momentum is unstoppable. The opportunities are limitless. This is the moment to invest in Sri Lanka's future. The time to invest in the Colombo Stock Exchange is now.
Ayubowan, Vanakkam, Assalamu alaikum, and a very good morning, ladies and gentlemen. Good morning. See, we got to have a lot of energy because we've got a half day to run where we're all here to drive Sri Lanka towards positivity and all that we want. So good morning. Now that's the spirit I'm talking about. Thank you very much, ladies and gentlemen. A very warm welcome to Invest Sri Lanka Capital Market Investor Forum 2025, creating opportunities for growth, organized by Colombo Stock Exchange and Securities and Exchange Commission of Sri Lanka. Let me introduce myself. My name is Ashingsani Veerasinghe and I will be your host for today. And as we start off, ladies and gentlemen, Invest Sri Lanka, a landmark forum that has brought together policymakers, global leaders, investors, fund managers, financial experts, and key stakeholders with the shared goal of exploring the immense potential of Sri Lanka's capital market. So a very big thank you goes out to all of you for coming together to drive Sri Lanka's capital market forward. Can we have a good round of applause to all of you? Thank you very much. So today we will engage in meaningful discussions and collaborations, and it is definitely an opportunity for us to connect, share ideas, and contribute to shaping the future of Sri Lanka's financial landscape. Now, for us to do so, it wouldn't have been a possibility if not for our sponsors. Now, it's time to thank our platinum sponsors, Asia Securities, HNB Investment Bank, and also we've got silver sponsors, Asha Phillips Securities, Bartlett, Religas Securities, Capital Trust Holdings, CTC, LSA, Lanka Securities, LOLC Securities, First Guardian Equities, SoftLogic Stock Brokers, and also we've got valued supporting partners, CA Sri Lanka, Ceylon Chamber of Commerce, CFA Society of Sri Lanka, Deloitte, ICC Sri Lanka, Singapore Sri Lanka Business Association. Can we have another round of applause to all the sponsors? Thank you very much for making today a possibility. Now, as we commence Invest Sri Lanka Capital Market Investor Forum 2025, it's my honor and pleasure to invite Mr. Dilshan Veerasekara, Chairman, Colombo Stock Exchange, to deliver the welcome address.
Ayubowan, Vanakkam, Assalamu alaikum. Welcome, ladies and gentlemen, to the Invest Sri Lanka Capital Markets Forum 2025. I would like to start off by acknowledging our special dignitaries here today. Honorable Professor Anil Jayantha Fernando, Minister of Labour and Deputy Minister of Economic Development. He is still on his way and will be here in time for his panel discussion. Honorable Dr. Harshana Surya Peruma, Deputy Minister of Finance and Planning. Dr. Nandalal Veerasinghe, Governor of the Central Bank, Senior Professor Harendra Disabandara, Chairman of the Securities and Exchange Commission of Sri Lanka, Mr. Akif Sahid, Chairman of the Securities and Exchange Commission of Pakistan, Mr. Farooq Sabzwari, CEO Pakistan Stock Exchange, Mr. Mominul Islam, Chairman of the Dhaka Stock Exchange, Mr. Mohammad Anushan Latif, Managing Director, CEO of the Maldives Stock Exchange, representatives from the Capital Markets Development Authority of Maldives, and representatives also from the Nepal Stock Exchange. Distinguished speakers, panelists, our international visitors, I think numbering over 100 from over 24 countries who are present here today, local fund managers, investors, market intermediaries, listed company representatives, our sponsors and partners, international, local media representatives, SEC commissioners, CSC, CDS, CSC Clear board members, my colleagues from the CSC and SEC, ladies and gentlemen. We are slightly late on schedule, so I'm going to sort of cut short my speech to try and save some time because most of our keynote speakers and dignitaries need to leave and have busy schedules. I think we are having this momentous event after a lapse of over 11 years. We last had a Invest Sri Lanka forum on this scale in 2014, and it's only the third time that capital markets have been showcased in this way in Sri Lanka. I think once before in 2000 also we had. So it's been few and far between, but we hope to sort of make new ground and make this a more regular event, annual or maybe at max a biannual sort of event. The CSC, SEC, the stockbroking community have come together to curate this event, and we sincerely hope all of you will get value in terms of not just what will be presented and showcasing the investment opportunity, but also the networking opportunity that is there for all of you. That doesn't end here today. I think we have a networking session in the evening at the Cinnamon Life. I sincerely hope all of you will be present for that, and the one-on-one meetings that we will facilitate with the listed companies or intermediaries that you wish to sort of meet. We believe that Sri Lanka stands at a very pivotal juncture in its history. I don't think any one of us in this room has seen an opportunity as it has presented itself in our history, essentially our post-independent history. And why I say this is I think we've gone through a lot as a nation, as people, but you would know you can never knock Sri Lanka down. We would stand up. We are probably one of the most resilient nations out there, having been through multiple turmoils and having just come through a very, very hard period of political turmoil, the Easter bombings, COVID, the economic crisis. We've had probably the worst 5 to 6 years in our brief history. Today, we've turned the corner. We've done a 180-degree U-turn and stand at a moment that has not presented itself in our history before. It's a perfect storm of sorts, and that's why we thought it's important to showcase this market. We've completed debt restructure, we've on our IMF program, we've turned around economically. We've seen over 5% growth after 2 years of contraction. We've got our country rating upgraded, so we are no longer in RD, we are in CCC. We have very strong reserves back to $6.5 billion, 3.5 months of imports. We've got a stable currency that's appreciated over the last 18 months or so period. We have ample liquidity in our banking system. Currently, market liquidity is about 170-80 billion rupees. We have a low interest rate environment. Policy rates were unchanged at yesterday's monetary policy meeting, but we have single-digit policy rate of 8%. Even though we are currently in deflation, we will come out of it and have low, medium rate inflation that will, of course, again promote growth. And from a capital market perspective, I think there's a lot to be said in terms of valuation. So we are still under 8.5 times price earnings. We are the cheapest market in this region. We are trading at 1 time book. We are also the most advanced, if you leave out India, I think in terms of systems, processors, product, and governance, we stand out. We have done a lot with the regulator, the SEC Act coming in a few years ago, and then a development around it. The listing rules have been sort of relooked at. New product innovations have been brought in. We've brought in a whole heap of products from essentially a single product market maybe 3-4 years ago, that we brought in a lot of debt products. So we brought in sustainable bonds, infrastructure bonds. We've had the first 2 issuances of green bonds taking place on the exchange. We are introducing sukuks, and we would have the first sukuk being issued in a few weeks' time. And the market infrastructure, bringing in a central counterparty system, upgrading our CDS, all of these things have been done. We are also looking at moving into diversified products like commodities. And to that effect, we've actually signed a partnership with NCDX in India to start the first derivative exchange within the port city. We've submitted our bid for that. So a whole heap of changes that have taken place that I think position our market unlike no other. We also have a special reason to celebrate today because we have the regional frontier markets. So we have Pakistan, Bangladesh, Maldives, and Nepal here today. And we hope to sign a MOU between our 5 markets, the 5 frontier markets of South Asia, in terms of collaboration and promoting our market as a whole. Obviously, India is the big brother. It's far more advanced. We feel that the 5 of us probably have a better opportunity to collaborate, and that too is being undertaken here today. And hopefully, that would mean a continuation of the now defunct SAFE, or South Asian Federation of Exchanges, being reignited here today in Colombo. And hopefully, I think this forum can actually go on to be a regional forum that we showcase capital market opportunities of all these 5 markets and take turns hosting this event. So there's a lot happening. I'm not going to take too much time because we are slightly behind schedule, but please do engage with the panels, do ask questions, network amongst yourself. Please do come for the evening event as well. It will be a far more relaxed event. Smart casual, I believe, is the dress code, and we can enjoy some Sri Lankan hospitality and cuisine at that event. So thank you very much once again for everyone who took time to be here, especially our over 100 delegates coming from over 24 odd countries. We sincerely hope you'll make this event special, not only in terms of your participation here, but enjoying our country, our hospitality, our culture, what you have to offer. I think experiencing Sri Lanka is the best way to get to know its people. Thank you very much.
Thank you very much, Mr. Dilshan Veerasekar, Chairman, Colombo Stock Exchange. Ladies and gentlemen, time is a crucial factor for us today, so let's see how best we can serve as we move forward. Now, it is my honor to invite the Chairman of Securities and Exchange Commission of Sri Lanka, Senior Professor DBPH Disabandara, to deliver the opening remarks.
Good morning, everyone. Dear Deputy Minister and ladies and gentlemen, it's an honor to address this distinguished forum and the gathering at the Invest Sri Lanka forum. At the very outset, I must say, let me express my gratitude to all of you, especially the international participants, your continued confidence in Sri Lanka's economic and capital market potential. Sri Lanka has endured its worst economic crisis in the history. However, through collective resilience and strategic reforms, the country has rebounded faster than we expected. So today, we stand at the threshold of a new era, one that demands a robust and well-functioning capital market to support this economy. At the Securities and Exchange Commission of Sri Lanka, our duty is to ensure that financial markets fulfill their fundamental purpose, that's capital formation, so funding economic growth and creating opportunities for investors and business alike. As both a protector and enabler, we uphold market integrity through regulation while also fostering an environment that fuels growth, drives innovation, and instill lasting investor confidence. Our mission goes beyond oversight as a regulator. It is about striking a balance between governance and dynamic market developments. So with the enactment of new SEC Act, as mentioned, in 2021, we have significantly strengthened our regulatory framework to uphold the integrity of Sri Lankan capital market. This landmark legislation empowered us to combat market misconduct more effectively, even corporate governance standards, and safeguard investor protection and their rights. With this background, we have never wasted a crisis. Instead of, we have learned, improved, and evolved our skill set to better monitor the markets and safeguard financial stability in this country. In line with the global advancements in regulatory and oversight, the SEC has selected the cloud-based SupTech system. So it's a supervisory tool, an innovative platform that integrates data analytics, artificial intelligence, and automation to enhance our supervisory mechanism. Further, strengthening our market surveillance capacity, we have taken a significant step by selecting a state-of-the-art market surveillance system from NASDAQ. I think it will work, and beyond regulation, the SEC is committed to fostering capital market development by introducing innovative products and platforms. Our aim is to add depth to the market and provide diverse investment opportunities for a broad range of investors and varying risk appetite and investment horizons. So we have introduced a regulatory framework for green bonds, blue bonds, and making a significant step towards sustainable investment in Sri Lanka. And even beyond that, we have introduced social bonds, and that will be in operation very soon. In addition, we have expanded our market offerings by introducing perpetual bonds, infrastructure bonds, high-yield bonds, sukuks, stock borrowing and lending, and regulated short selling as well. So these instruments will not only broaden the investment opportunities, but also play a crucial role in supporting the long-term capital formation in this country, particularly for critical infrastructure projects when the government expand their next level expansions in this country. The SEC is currently in the process of evaluating a proposal to establish a multi-asset class derivative exchange. And this initiative aims to introduce a comprehensive platform that encompasses range of underlying asset classes, including commodities, thereby broadening the market participation and enhance risk management for the investor community. So looking ahead, Sri Lanka navigates its economic resurgence. The SEC remains steadfast in redefine its role of supporting the capital formation, the critical driver, sustainable economic growth, and to drive economic revival of this country, we have developed a comprehensive roadmap with short-term, medium-term, and long-term strategies, all aligned with the current government's vision to build a nation and build this nation that funds its growth through equity and innovation. So, in an era defined by rapid technological advancement, as we all know, the integration of digital assets, like in other counterparts in the region, and infrastructure in essential and modernizing Sri Lanka's financial ecosystem. So embracing innovation in capital markets will not only enhance efficiency and accessibility, but also unlock new avenues for investment and growth. So we want to create a dynamic and resilient market that fosters long-term stability, ensuring sustainable prosperity for generation alpha, beta, and beyond. So we call upon investors, business, and all stakeholders to actively participate in this transformation. So your trust and engagement will be vital in shaping stronger and more resilient and globally competitive securities market. So, in conclusion, Sri Lanka's economic revival is an opportunity to build a future-ready capital market, one that is innovative, transparent, and inclusive. So, together, let us work towards realizing the full potential of our market and driving sustainable economic growth. So, thank you very much, and looking forward to have a fruitful discussion in time to come. Thank you.
Thank you very much, Senior Professor DBPH Disabandara. Now, ladies and gentlemen, a clear and forward-looking policy direction plays a crucial role in shaping capital markets. We are honored to welcome the Deputy Minister of Finance and Planning, Sri Lanka, Honorable Dr. Harshana Surya Peruma, to elaborate on the government policy on capital markets.
Very good morning and a very warm welcome for all of you all who have come from far and near to see this beautiful island nation. I'm sure the perception you had before you got to Sri Lanka, this country was a bankrupt nation 2.5 years ago. What will it be offering to you today? So let's look at some of the details as a nation, what we can offer in terms of collaboration, sharing of knowledge, and the journey that we have come. What are the lessons that we can learn to take investments forward, the potentials of the companies to the next level, and obviously valuations. I heard the chairman of the exchange mentioning we have 8.5 in terms of valuations as a market, and is one of the best to enter. Having 8.5 valuation may not be the only reason for investors to relook at Sri Lanka. There are other building blocks that we are putting together. But we are at that right moment as of now, because those ingredients are getting into place, they are forming shape. The regulator is facilitating, playing a facilitative role. Exchange is championing the cause. Entities are doing their level best to increase their performance. There are other ingredients also from a political perspective, from a stability perspective, that we need to put in place as well. This is why this moment is the right moment to enter to Sri Lanka. Why? All these key pieces are in motion as we speak. As a nation, there's no way we can go back to where we were. People have made a choice and chosen a new path to take this country forward. In that journey, many who were not politicians have become politicians. A flavor of professionalism has been brought into the activities that we do in policy making. Countries' approach, countries' future is considered when we are deciding our policy way forward instead of the benefits for the politicians. But there are certain messages that amplified better than the others when we started our journey to recover and to get to where we are today, that is zero tolerance for corruption. Among the reasons that this nation went down was tolerating malpractices at various levels. It's no secret. Whereas the new government has implemented the policy of zero tolerance for corruption that galvanized many people around the coast, professionals, businesses, people who never knew who we were, decided to support us because of these policies that we chose and to share with people to take this country forward. In doing so, there were few things that we wanted to be focused on: clarity, consistency, and continuity. Clarity in terms of political direction, where we want to go, where we want to take this nation. That's where zero tolerance for corruption that I mentioned a short while ago. And we were very clear that we are going to go for a production economy. We need to take this country to the next level, economy to the next level, is by supporting businesses to grow to the next level. That facilitation process to take our less than 20 billion export economy to 40 billion export economy within 5 years, that's an ambitious target, ladies and gentlemen. But it is possible. It is possible if all of us work towards in that direction. That's why government policies are supporting, targeting, energizing businesses, from the SME sector to larger corporates, to entrepreneurs, to startups. An ecosystem is being built in the process. We don't have the luxury of time. Many things need to get done faster. That's why the political will and the leadership is supporting the course that we are taking, the chosen path that we have decided to go forward to be in the best interest of the country, to ensure policies at the national level, institutional level, regional level, this will get implemented in a manner the development will transpire and reach out to the regions outside the main provinces and the districts in Sri Lanka, allowing other districts to contribute to the GDP in the same vigor and the manner like some of the districts contributing as of now from the Western province. The second aspect on the consistency. We were very clear when we look at our budget that we have not changed many of the regulations, policies, and taxes, because we know businesses, particularly investors, when they decide to invest, they prepare their cash flows for X number of years, medium term and long term, to ensure government will support those policies. Suddenly, if the government comes and change those policies, change the tax structure, it's going to be quite difficult for businesses to hold on to the feasibility that they had at the time of starting the investment. This is why budget is echoing that message of consistency, allowing businesses to continue what they were doing, what they are good at. And the next aspect in terms of continuity. Prior to the elections itself, we were very clear, the current government, that we will not derail from the IMF program. That is to give the message of continuity. We may have our own preferences in terms of the way how those agreements were signed, etc., but the continuity is important as a country. That's why we openly mentioned prior to the election itself, we will continue with the program, with negotiations with IMF to get the best benefit for people, for our businesses. Particularly due to economic calamity, many segments were suffering, including vulnerable people in the society. So provisions had to be made, and it was supported. We were able to reach some of those outcomes, and I'm sure we will be able to reach rest of the outcomes in time to come. In this journey, what is the outcome? Because of the approach that we adopted, clarity, consistency, and continuity. What is the outcome of that approach? The stability that we have created today. 2.5 years ago, we were a bankrupt nation. Today, we are holding international conferences of this magnitude. So the outcome of this approach is the creation of stability. Political stability with 2/3 majority in the parliament. I'm sure it will translate into economic stability in terms of our reserve positions, in terms of our currency, the strength of our currency, in terms of our inflation, in terms of affordability, in terms of energy pricing. It will translate in time to come. We have started that journey, and it's a promising journey. That's why I mentioned at the beginning, it is now to enter Sri Lanka. The valuations are good. It is an opportunity. Many projects, many investments, both from FDI side and foreign investment side. Several discussions are going on because investors know the price that they had to pay before in terms of corruption is now taken away from the equation. They can come, discuss, negotiate with the authorities that are dedicated and assigned to engage on those activities without paying politicians hefty prices to enter Sri Lankan market. The outcome of stability and echoed into the next level, that is where the confidence, the stock exchange is a testimony, the way how market performed since the election. They recognize the message that we gave prior to the election. The best way forward is not just by slogans, but demonstrating in action that we are serious of what we stood for. And that was recognized by the market and the valuations of the companies. It started giving returns to investors who have taken the risk at the early stages. And we want to take that confidence to the next level, to engage the international community, international investors, to look at Sri Lanka, invest in Sri Lanka. There are several opportunities. So what's next? The next way forward is to capitalize on this opportunity. We have robust regulations from the market side, the monitoring mechanism, supervision mechanism. Our AML frameworks is to ensure we are able to showcase to the world that we want to go by global standards in terms of delivery. For investors, there are several entities, multiple entities. There are indices showing the potential of those entities, S&P index as well as all share price index, the potential and the opportunities. For companies to go public and showcase the journey of compliance, the journey of governance that they have adopted, and willing to be transparent in their engagements. So that's a significant opportunities for companies to come into the market. For the economy, it's an opportunity to grow, as I mentioned earlier, from the 20 billion to the 40 billion market export segment. That is an enormous potential that we are going to unlock. Government is determined to support all our initiatives, authorities, and businesses to reach those destinations. In this journey, we are not alone as a country. It has grown across borders. That is where mutual cooperation, I'm quite pleased to hear, Chairman, that you mentioned, and the Chairman from the CSC also, there are MOUs that is to be signed to signify that mutual cooperation, cross-border cooperation among the regulatory authorities and among the exchanges. However, in terms of either frontier markets, emerging markets, or developed markets, there are other areas that is evolving in the global framework. It is no longer physical borders and boundaries. A virtual world has been created with a lot of connectivity and a lot of opportunities also, at the same time with a lot of challenges as well. We need to consider those virtual engagements, those virtual exchanges, and to consider a way forward, how to harness the best benefit. I was happy to hear Chairman of the SEC was mentioning new product developments, new approaches, new perspectives that we are going to take Sri Lankan market to the next level. Capital markets need to be relevant for what we do today. We were comfortable to do what we were doing yesterday, but we need to be evolving to do what is required and demanded by the ecosystem for tomorrow as well. That is why we can have a look for each dollar of capital raised from the markets, how much of capital has been raised elsewhere. Each dollar of capital raised locally, how much of capital that has been raised elsewhere by local entities. That's where we need creative solutions, new products, new engagements, new conversations. That's why I'm thrilled to see so many stakeholders and participants from several countries taking part in this conversation and engagement today. What do we have to offer as a nation, Sri Lanka? The key asset are our people, the resilient people that we have. Your investments will be managed by professionals, by entities that has the potential to take the valuations to the next level. 2.5 years back, it was a bankrupt nation. Today, it is standing up, which I mentioned earlier in an earlier forum as well. It gives the indication that we are able to rise up again, to go back to the glory, go beyond the positions that we were in as a country. And the best way is to come in person and see what we have to offer in Sri Lanka. That's why I'm very thankful and grateful for all of you who have visited in person, perhaps others who are joining online. An invitation to visit Sri Lanka. In one angle, it will boost our tourism sector, provide good valuations to the companies in the tourism segment, but more importantly, to enjoy hospitality and to see this nation, witness firsthand what we have to offer. Go beyond Colombo, travel to regions, engage with regional leaders and communities to see to understand the potential. That is where the real valuation, that is where the multiples are getting stacked up. So I would like to wish you all the very best for the rest of the day, for the session, for productive engagements and discussions, deliberations, for networking, and as a result, to reach out to those outcomes that we are looking forward as a nation. Once again, thank you very much for inviting me, and wish you all the very best for the rest of the day. Thank you.
Thank you very much, Honorable Dr. Harshana Surya Perumal, Deputy Minister of Finance and Planning, Sri Lanka. All right, ladies and gentlemen, as we look beyond Sri Lanka's borders, it is essential to understand the global equity landscape and its implications for the nation's capital market. Now, we are honored to invite Mr. James Johnston, co-head of Red Wheel Emerging and Frontier Markets team and portfolio manager for the Red Wheel Frontier and Next Generation Emerging Market Strategies, to share his insights on the global outlook on equities and the Sri Lankan capital market. Please put your hands together as I invite Mr. James Johnston.
Good morning, ladies and gentlemen. It's my greatest honor to be presenting to you today in a country that I've come to love over visiting for over 3 decades since I first came here, admittedly as a student, to have some fun on your beaches in the early 90s. But I've been coming back for business reasons for many years now. I'm delighted to say I made my clients a lot of money in the Sri Lankan stock market over the period of time. And today I think does look like a fantastic opportunity to be revisiting Sri Lanka. But I'm just going to briefly share some thoughts about the overall state of global markets. And I think one of the really important aspects to remember is that markets move in very long cycles. We went through a very extended period post the Industrial Revolution, and if you go back even to kind of the early 1800s, India and China were still over 80% of world GDP, and it took a very long time, in effect, for the Industrial Revolution to move a huge amount of global manufacturing towards Europe. And really what's happened over the last 50 years, really since the emergence of the Asian miracle of manufacturing, is we've been through various cycles where capital is always seeking a cheaper form of labor to provide a serious improvement in returns on equity and a pickup in capital returns. So we've seen this classic cycle. Nothing we've really ever seen today is nothing we haven't seen before. People often talk about China as a new entity, a new arrival onto the global scene. But actually, if you think about what Japan did in the late 70s and in the early 1980s, Japan moved capital out of Japan to find cheaper sources of manufacturing. And indeed, countries like Thailand were one of the early beneficiaries. So if you think that the world is constantly going through cycles of digital invention versus real manufacturing, there's a couple of very obvious examples over the last 20 years. We went through this incredible period in the 1990s of invention. So you had the first wave of manufacturing miracle, the made in Hong Kong, the 1980s style. But we had this huge invention procedure called the internet, the interweb as it were. And it was all very well us making mobile phones in Finland. Nokia could turn out a couple of million mobile phones a year, and they cost $10,000 each. But when we suddenly realized that the mobile phone was here to stay, we needed this incredible movement from an invention, and inventions have a huge capital return associated with it. It costs virtually no money really to invent things. But actually then to turn invention into reality takes an enormous mobilization of global labor and global commodities. So as you can see on the chart here, this is just global capex in the red line versus the stock markets, in effect. Emerging markets in the black line versus NASDAQ. So really capital versus labor. Labor formed by EM and capital formed by NASDAQ. And as you can see, as global capex picked up very dramatically, that's the industrialization of China. That's as China began to mobilize over 750 million people out of an agrarian existence and move them into an urbanization, like manufacturing, economic miracle, and truly one of the most amazing movements we've seen in human economic history was the rise of China. And that was obviously associated with this incredible rally in the emerging markets, the invention of the acronym BRICS, the invention of jobs for people like me to invest in China, to invest in India, and was associated with this incredible rally. But again, markets are markets, and markets always come to an end. And as you can see, just at the peak of the outperformance of emerging markets versus NASDAQ, you'll remember, and some of you might have made the same mistake that I made, that you sold your Microsoft shares in 2012 on 6 times earnings. You sold your Apple shares on 5 times earnings. I've already got Apple 3. What would I ever want to buy Apple 4 for? Well, we're all on Apple 16 or whatever we're on now, and Apple's worth $3 trillion. So we all make these mistakes. As you can see, though, the red line trended down. We didn't invent anything. We had this great production. We make 1 billion iPhones, a billion mobile phones a year. We make 600 million laptops a year. China reached this incredible manufacturing capacity. It went from 2% of world manufacturing to 28% of world manufacturing. But people buy the top of markets. The black line, which is obviously EM versus NASDAQ, in essence, started to trend down. And that was the rise of the next wave of invention. We've invented an incredible amount of new technology. We've had electric vehicles, we've got the energy transition that the world is undertaking. We have windmills, solar panels, we have this incredible move towards renewable energy. And at the same time, we've added to the digital revolution that the world is undergoing with AI. And that's led to this incredible outperformance of NASDAQ, again, versus emerging markets. But the grey line is actually Sri Lanka, and this is what I'm here to talk about. The next wave of manufacturing can't take place in the classic emerging markets. China has now to find ways to get rich before they get old. And the world faces this incredible challenge that there is no China. There's no second China that can come through and deliver the source of lower cost manufacturing to deliver higher returns for the goods that the world needs. Sri Lanka sits at this very interesting part of the solution, which is where's the next China going to come from? The next China is going to have to be an accumulation of the countries we see in the bottom left circle. The world is short 2 things. The world's not short semiconductors. The world's not short chips and bytes and gigabytes. I came back from Israel in 2000 with a small NAND flash card, and the younger members of the generation won't know what a NAND flash card is. But I came back with a 2 gigabyte NAND flash card, and my My father laughed at me and said, "Oh, that was 2 floors of my office when I ran the computer business for Unilever in London. What are you going to do with 2 gigabytes? You'll never fill 2 gigabytes. I said, "Dad, this is worth $100. I'm going to take some photos." The fact that today 2 gigabytes would probably cost you less than 0.001 cents of a dollar. Digital is infinite. Let's never forget that. Digital is infinite. The hard reality of the world today is that the finite aspects of the world economy sit on this chart. The world has a finite amount of young people left in the world. As much as China is aging, Japan is aging, Korea is aging, Europe is aging, we've got a very difficult demographic situation across the Western world, and what most people misunderstand is across many parts of the emerging market world. The only source of low-cost labor and long-term development economies will have to come from the bottom left. And I would urge all of you to look at what you wear, to look at what you use to make phone calls with. I no longer have a Chinese phone. Apple is a Chinese company, in essence. I have a Vietnamese phone, and I have a Pakistani phone. My great pleasure when I came back from Lahore was to come back with a Pakistani assembled phone. The future of world manufacturing has to sit within that bottom left-hand circle. There's no one China that's going to come to the rescue of global manufacturing. There's going to be a collection of countries which benefit dramatically. And I see coming like Sri Lanka, which will have this incredible opportunity. And I wouldn't be surprised to say that in 2025, when my children are begging for iPhone 25 and you check the box, it might still say designed in California, but it might well say assembled in Sri Lanka. The other incredible aspect of obviously what the world is going to undertake is a dramatic shortage of finite resources of commodities. We obviously go through big cycles in terms of where we find the uses of commodities and where we obviously then have supply-driven capacity bubbles, and obviously at the other end of it, the demand falls off and we've got too much supply. It's a classic cycle. I would just point you to the one great commodity bull market of the last 5 years, which most people don't really associate with the classic commodity bubble. But everyone tells you all the time that the dollar's been incredibly strong. Well, I'd tell you the dollar's lost 2/3 of its value against gold. Gold is the classic commodity because you're not just using it in economic manufacturing, it's not part of global GDP, but when seen as a store of value, it's incredibly important to see the demand-supply aspects on gold. The entire world's gold that actually sits in the world's crust probably fills up 1/4 of this room, and the amount that we've already taken out of the Earth's surface is 2/3 of that. Supply of gold is incredibly tight, and when you print 35 trillion little dollar bills, demand for gold goes up a lot. And we've seen this incredible response in the price. If you think about a commodity like copper, copper's incredibly important as we electrify the world. If you think that the human race have used 800 million tons of copper in 2,000 years, if you take any of the net zero 2050 projections, the world probably needs to use 800 million tons of copper in the next 25 years. Now, the great problem is we only produce 20 million tons a year, and we're going to really struggle to produce 21 million tons a year. Now, Mr. Trump and all the associated difficulties that we currently have with tariffs and geopolitics, Mr. Trump can tell TSMC to change its name to Texas Semiconductor, and we can build fabs in Arizona and Texas. Even Mr. Trump can't move the copper mines of Peru and Chile and Zambia and the Congo to the US. So the finite source of labor and the finite source of commodities is, I think, going to be an incredibly important part of the next wave of global investing, where we move away from this incredibly expensive digital aspect of the world to actually going back to the classic manufacturing cycle to put into production all of these incredibly clever inventions is going to require the human ingenuity and the human workforce that we find in some of the frontier markets, combined with a dramatic increase in commodity demand. I've just put a little one together. How do we then see Sri Lanka? I don't want to steal our next speaker's space on Sri Lanka, but obviously Sri Lanka occupies one of the really exciting aspects of the world. It has a bit of everything. You've got this incredible workforce that we just heard about from the minister. You've got this incredible natural beauty, which obviously sits within the travel and tourism element. And you've obviously got soft commodities. And people often overlook the soft commodity aspect. But the self-sufficiency in soft commodities is an incredibly important aspect of the world going forward. So we're very excited. I was in Singapore in the 90s. I see that the DBS CEO just quit. I wouldn't be surprised to say I kind of thought that DBS at $5 a share looked quite exciting. it went to 50 Sing dollars. Looking at the banks in Sri Lanka, they sit at the heart of obviously an economy. In 20 years' time, which I maybe still be working, hopefully not, but in 20 years' time, I wouldn't be surprised today that some of the performance you've seen out of the Singapore banks, you might replicate out of the Sri Lankan banks over time. It was a classic recovery from a macro situation. Obviously, tourism, COVID was an incredibly disruptive event for many parts of the world. And worker remittances, again, points to this incredible aspect. And again, to the Minister's point, one of the most exciting advantages that Sri Lanka has is your incredible workforce and young population. So it was really a classic recovery, stabilization. But my kind of last point on that would be, well, let's not do it again. The valuations are incredibly attractive now. Market cap to GDP is incredibly low across the bulk of frontier. I spend a lot of time in Dhaka and Pakistan, so I'm delighted to see representatives from those markets as well. But there really is a huge deficit of global interest. If you think that Nvidia and Apple are worth $3 trillion, the world's entire investment in frontier markets today, from a global capital markets perspective, has probably fallen to below $10 billion, which is an incredibly small amount of money. It probably peaked around $100 billion back in the 2016-2017 period, but really the frontier markets have been crowded out very much by this digital aspect that I've talked about. And I think that returns, they're going to begin to find huge pockets of what we call growth at a reasonable price, but very extreme cheap valuations. And you can see many of the markets we're talking about from South Asia represented here today, and we've obviously got some very successful investments in those countries. But my point about let's not do it again, the big problem is currencies. The big problem continues to be macroeconomic destabilization that comes through from keeping currencies too strong for too long. If you go back to 97, 98, the great classic Asian crisis of financial markets, which happened in Southeast Asia, you had this dramatic currency devaluation across Malaysia, Korea, Thailand, obviously most notably Indonesia. And of the Southeast Asian currencies which all collapsed in 1997, they've all gone on to subsequently having had a strong reform process. None of those Asian currencies blew up despite the Fed hiking cycle of 23. Incredibly, the Thai baht is back at 32 baht to the dollar. It's nearly back to its pre-97 crisis levels. I had the great privilege of meeting Prime Minister Anwar from Malaysia, and the Malaysian ringgit has appreciated against the sterling, against pound sterling, by 20%. So the Southeast Asian crisis was an incredibly important crisis because governments took the sensible and the correct decisions and then put in place 2-3 decades of long-term stability. This is a chart of frontier market currencies, and as you can see, we go through classic boom-bust cycles. We have staircases. The Nigerian naira has been a very difficult currency. The new administration's put in some fantastic measures. We've obviously had devaluations across South Asia, Pakistan, Bangladesh, and obviously notably in Sri Lanka. But you see, what I'm hoping and what I'm thinking is that actually the new administrations, the new fiscal policies, the new monetary policies, the new outlook for countries like Sri Lanka is going to be very reminiscent from the 97 crisis of Southeast Asia, that the lessons are learned and that the future, the next 2 decades, is a period of macro stability. But again, we don't want to come back to this period of currency depreciation because, as the Minister made the point, it's incredibly important for investors, and I'm talking real FDI capital investors. If Tim Cook is going to come here and build 50 million iPhones, he definitely wants to understand there's long-term macro stability. So I always put on the chart the Rwandan franc. For me, that's my favorite frontier market currency. I go to bed and I know that I'm going to lose 1 basis point every night. It's a very simple inflation differential currency depreciation. It performs very, very strongly over the long term, and you get away from this incredibly difficult period of currency devaluations. So I think the future is incredibly exciting. I think sitting here today in Sri Lanka in 2025 is going to be very similar to have been picking up the markets of Thailand and Indonesia and Malaysia and Singapore post the 97, 98 crisis. I think the future looks incredibly exciting. You have all of the 3 sources of excitement that the world needs. You've got an incredible, sophisticated, educated young population. You've got amazing access to some of the soft commodities of the world, if not hard commodities. And of course, you've got the best beaches in the entire world. So thank you very much and good luck, everyone.
Ladies and gentlemen, can we give another round of applause? Thank you very much, Mr. James Johnson, for your address. And it's now time also to recognize the presence of Honorable Professor Anil J. Fernando, Minister of Labour, Deputy Minister, Economic Development, Sri Lanka. Thank you very much for your presence this morning. Now, ladies and gentlemen, as we move forward, with Sri Lanka positioned within the Asian frontier markets, it is imperative to analyze how we compare with our regional peers. To provide a comparative analysis in this regard, I would now like to invite Mr. Matthias Martinson, Founding Partner and Chief Investment Officer at Tundra Fonda AB.
Good morning, ladies and gentlemen, and thank you to the organizers for having me here today. I'm from Tundra Fonda, a Swedish-based emerging markets boutique asset manager. As anyone involved in frontier markets mainly, we're still small, around $1 billion, out of which $300 million is in frontier equities. And I think when we talk about frontier markets, I think it's important to set your definition in this context. And for Tundra, we don't really look at the MSCI indices or the FTSE indices, but instead we focus on the World Bank definition, who has divided the world into 4 different layers. You have the high-income countries, countries like US and Sweden. Then follows the upper middle-income countries, countries like China, Brazil, Mexico. Below that are the lower middle-income countries, which are basically countries with a GDP per capita of around $5,000 or lower, followed by the low-income countries, which is kind of at the bottom here. And the 2 lowest categories are the countries which we focus on and which I will discuss in a little bit more details. These countries today constitute around 50% of the world's population, but in 50 years it's going to be 2/3. So we think, just as James mentioned, that the economic activity will be centered a lot in these regions. It's the only place in the world where the workforce will actually increase over the next 50 years. So we try to focus on these markets and try to find the best companies within that group. So if we summarize our frontier assets, this is our universe, you can say. As you can see, there's a lot of names that I think many investors have yet to invest in. Largest market, Pakistan, followed by Vietnam, and then we have Sri Lanka in 3rd place, narrowly followed by Bangladesh. If we would put Sri Lanka in a frontier markets context, we can kind of summarize. What we have here are tables. We have the populations, we have the size of the GDP, number of listed companies, the market cap of the stock exchange, the daily traded value on the stock exchange, how many companies are listed that are above $1 billion, how many companies are trading more than $1 million a day, and finally, we have the market cap to GDP at lower end. And I think Sri Lanka, as you can see, it stands out. It's a much smaller market than markets like Pakistan or Bangladesh. And thereby no liquidity, etc., is significantly lower. On the positive side, I would say that it's an old stock exchange. Even if the Colombo Stock Exchange was started in 1985, the oldest listed company that is actually still around, Ceylon Coal Stores, I think was listed in the beginning of the 20th century. That follows that you have a corporate culture, you have a lot of family-owned businesses, you have a lot of historical numbers for investors to evaluate. On the negative side, and I think which is a problem for us and for many other investors, is that Sri Lanka, compared to its Asian frontier peers, the transaction costs are too high today. Somewhere around 100 basis points to trade below $300,000. Which is around 5 or 6 times higher than its Asian peers. But that is kind of an easy fix. If you invest in Sri Lanka, I think you need to do like investors like Red Wheel and Tundra. You need to be very long-term, take into consideration the liquidity. From a quality and transparency index, I think outside our thematic philosophy, we also were early adapters of sustainability integrated into the investment process. And on an annual basis, we do an evaluation called the Tundra ESG Spectrum, which is basically 48 different areas where we evaluate companies, how adapted they are to future circumstances. Half of those questions surround governance questions, and the remaining are on the environmental and the social side. In that context, Sri Lanka actually comes third, just after Philippines and Indonesia. It's particularly strong on both the environmental adaptability and on the social side. And it's ahead of a market like Vietnam in this case. On evaluation-wise, I think I've heard the P ratio of 8.5 times repeated so many times. So I'm sorry to show you the Bloomberg number, which is around 12 times currently. What we cannot conclude, I think a table like this is important in the sense that you can see how investors have kind of evaluated the risk perspective historically. As you can see, Sri Lanka has been trading at a discount to Vietnam, Indonesia, Philippines, and Bangladesh as well over the last 10 years. But significantly higher than Pakistan, which has this kind of particular risk perspective. We mentioned, I think a lot of times we get the questions, when will foreign investors return? And I think we can kind of conclude, and I'm sure James would say the same, that we try to convince them of kind of the long-term opportunities out there. The fact is that all of the Asian frontier markets have had massive problems in recent years. Vietnam have had $5 billion of outflows during the last 2 years. Both Pakistan and Sri Lanka, despite the strong performances, we've still seen outflows. I think this is kind of a general risk perception among foreign investors that kind of lingers on, and which of course was not really helped by the new Trump administration. On the positive side, we can say that both Pakistan and Sri Lanka, and actually now also Vietnam, we can actually see now that the local equity markets are starting to perform upwards despite the foreign selling. A gentleman here said that foreign investors as a share of the total trading today is down at a low 3 to 4% today. So I think we're probably coming to an aspect where foreigners, from a very negative period, they don't have really that much more to sell. No one is really invested, and I think for us that is an opportunity. So if we look ahead, the road ahead for Sri Lanka, and obviously it's been a reset of the economy. Already when we started investing in 2013, and especially 14 and 15, foreign investors raised the foreign debt. What if they're unable to repay their debt? We're going to have a debt restructuring. That was always a risk that lingered on. Then that was, of course, aggravated by the 2019 attacks, and then followed by COVID, which probably the worst disasters any country could have, with 2 consecutive crises like that. So we've had a reset of the economy. We had a sharp devaluation. The currency is now trading at the fair value as opposed to a regulated value before. What we always liked about Sri Lanka is that, yes, the size is much smaller, but look at the market like Singapore, 6 million people. It tells you that size is not everything to attract investors. Sri Lanka has its unique advantages with its geographical location. It's being a transshipment hub, 50 kilometers from India. The service sector will see trickle-down effects from that. No, it's not going to be a big industrialization and a demographic dividend country like possibly Pakistan or Bangladesh, but you're going to have the potential to build kind of a stable growth base, more based on the natural advantages that Sri Lanka has. And if we go to the tourist side, the leisure sector, I think there's a particularly strong and low-hanging fruit there. The graph to your right here shows tourist arrivals per square kilometers for a selected number of countries. And we can conclude that Sri Lanka, last year, you welcomed around 2 million tourists. Mauritius welcomed 1.3, but Mauritius is 2,000 square kilometers and Sri Lanka is 65,000. And having, for me, with my family, we traveled around the whole island, and I would say there's so many areas of Sri Lanka that is worth seeing. So I would be surprised if we don't see the number of tourist arrivals at least doubling in the next 5 to 6 years. And each tourist will bring FX revenue of around $1,500 to $2,000 per head. In order for this to happen, there needs to be investments in physical and digital infrastructure. When my family and me, we're about to relocate, and the most likely choice is Singapore for us. But we actually evaluated Sri Lanka at the same sense. We visited international school here in Colombo. The reason why we kind of tilted towards Singapore instead was that in the morning traffic going to the school, it took us almost an hour to go the 8 kilometers out to the international school. But that's also something that can be fixable. Sri Lanka remains the only of the markets where we invest where I would be comfortable moving my family. If we summarize all this, after the reset, the strong growth in remittances, the strong growth in tourist arrivals, and how Sri Lanka's economy is constructed, if fiscal responsibility is maintained, and there is a kind of continuous logical handling of Sri Lanka's economic situation, I think the preconditions are in place for Sri Lanka to actually remain in a positive current account. And for foreign investors, the currency risks and the risks surrounding that, that's always kind of first on the agenda. So what we see for Sri Lanka is not that it's going to be a new India or something like that, but you have the potential to be considered as kind of a safe haven, a nice place within the Southeast Asia, good corporate quality. For long-term investors, you can have a slowly compounding growth. There's no need to chase the 7 to 8% GDP growth rates or try to do a massive industrialization. There is this American tennis player called Arthur Ashe, and he had this amazing quote, which I think sums it up very well. He said, "Start where you are, use what you have, and do what you can." And if we look at Sri Lanka, with the natural advantages that you have in place, the strong literacy rate, the good gender equality across, a strong understanding of how to build a qualitative society, with the new political changes, I think Sri Lanka could be that safe haven compounder in the next 10 years. That's what we hope for, and I know other investors hope that alongside us. Thank you.
Thank you very much, Mr. Matthias Martinsen. Let's have another round of applause, ladies and gentlemen. Now, this applause is what's going to keep you warm throughout this session. So when you applaud, let's make sure your palms get warm, and that keeps you alive as we move forward. All right, ladies and gentlemen, now, at the heart of capital market growth lies the broader economic trajectory of a nation. It is now my privilege to invite the Governor of the Central Bank of Sri Lanka, Dr. P. Nandalal Veerasinghe, to present his insights on the economic outlook.
Good morning, Honorable Minister of Labour and Deputy Minister of Finance, Professor Jayanta, other distinguished officers, ladies and gentlemen, the participants, and also especially the investors and who are interested coming here from other countries. I think in my remarks, it's quite easy. It's no point of me talking about the Sri Lankan economy already. A lot of information already basically shown here, including the chairman CSC, SEC, as well as the two presentation. I'm quite like the presentation, the previous presentation. I think what the message we are getting here is what is more important for the looking forward is predictability and stability. So that's where I think as a central banker, what I can basically our responsibility It's all about, central banking is all about stability. For example, in our central bank, we have a responsibility mandate to maintain price stability and maintain the financial system stability of the institution that we regulate and also other institutions. So that's why it's important that our ability to maintain stability, both for price stability and financial stability going forward, which is something that we did not have about 3 years ago. I can remember when I took over the position almost 3 years ago in April 2022, I don't think anyone who are here could have imagined where we are today. So I'm glad to be here today, almost 3 years, being able to speak here. So that's thank you. So that's, I think, kind of a very good turnaround in the last couple of years. I think thanks to all people, even investors who are invested here, their patience, their pain that they went through, having confidence in Sri Lankan economy, having confidence in investing in Sri Lanka, but unfortunately, we had to go through this very difficult cycle, but now back to stability. So we have learned a lot of lessons. Going forward, this is where, under the new institutional structures or institutional sentence, where we now going forward, I think as a council, I can assure you the stability is important, and we make our best efforts to continue the stability, mainly macro stability, from our point of view, price stability. That is, talk about the currency stability, stable interest rates. It's all about our ability to maintain price stability, medium to long term, low and steady inflation. If you can maintain that thing, this is where the movement of currency is one example, is a nice example, a nice inflation differential, and that will reflect in the currency, very stable currency, and predictability is there. So key here is to maintain central bank's ability to maintain price stability. That's one. Second, for you to do business, the financial services, financial system stability is also most important. Once we have that, I think I'm glad that we are here now. And going forward, if we move in the same direction, and also other key component in the last presentation was, I'm sure Minister is here, who is responsible for fiscal policy, and fiscal consolidation and fiscal stability that we did not have 2.5 years ago when we had to declare the standstill and when we had to restructure our external debt obligation. Now we are all behind. And going forward, I don't want to talk too much about the past, but going forward now we are in a much better place. A lot of uncertainties are already gone. What is yet to come is basically, once we complete the small part of this Sri Lankan airline restructuring, I'm sure we'll get back to the normal ratings that we had before the crisis pretty soon. Sooner than we, at the small parts, I think we will get back to there. So going forward, opportunities are there. And also, let me talk about the role of the capital market. So it's not our central, I'm sure SCC and others have a greater role to play, but from the overall economic point of view, important indicator that we saw here is the one is market capitalization. And now the economy is stable, and going forward, I'm sure there are a lot of companies, businesses need to raise capital. But in our structure of our capital markets and also financial markets, still Sri Lanka's financial markets or raising capital for business is dominant basically by the banking sector mainly. So capital market, the market capitalization is still 14-15%. There's a huge potential. Why this is important? Because when you look at the banking sector that we regulate, banks cannot provide medium to long-term capital for obvious reasons, because they rely on their liabilities are short-term, relatively collecting deposits and then lending to the businesses or individuals. When you have short-term liabilities, exposure is mismatched, I don't think banks will ever be able to provide sufficient medium to long-term capital for the higher economic growth that we need in this country for the next several years. That is where the capital market must be the source of raising medium to long-term capital. That's why I see huge potential here. And also from our point of view, the stability of the financial system is important to maintain stability of the banking system. For that, we are now bringing in new regulations already issued in terms of banks' exposures to big corporates and also exposure to state-owned enterprises. They need to diversify their exposures, bring down the excessive exposures for next 3 years. We are given the timeline, which means what is the choice for these big corporates, big state-owned enterprises to raise capital is to go out of the banking system and try to raise capital out of the capital market. So whether, the question is that whether capital market is ready. I'm happy to hear earlier speakers talk about bringing new instruments, bringing new capital raising ways in terms of new listings, new instruments, and both the stock market, the corporate debentures, corporate debt, all these markets still relatively very low. I think that is something essential if we are to raise medium to long-term capital for this country to grow. I think this is one important responsibility for the capital market regulator and as well as the capital market participants. That's an important point. That's where this forum is timely and very good. This is from the capital raising point of view is one thing, not only for the private sector, but also for the government. If you look at the government in the process of fiscal consolidation, I don't think government is in a position to deploy capital out of the taxpayers' money to expand even state-owned enterprises. Even banks have limited capacity to support for them to continue to expand if there's going to be state ownership. So that's where I think it's important. These even state ownership, state-owned business entities, as well as large corporates, they should be able to raise capital for their future expansion and development through the capital market. There are two ways. One is, government policy, I'm sure Minister will elaborate on this, the policy. We talk about state ownership versus public ownership. So while keeping the state ownership is one thing, but having public ownership means offering public the opportunity to diversify into public ownership from the state ownership. I think when you look at Sri Lankan state ownership, Sri Lankan state owns a large, huge stock of the assets. Over several decades of taxpayer money being funded and develop this thing, I think this opportunity. Even this is good for the market developments, capital market developments. You need big state-owned enterprises be listed in the capital market that will provide more opportunities, that will bring in governance and all the important governance measures into state-owned enterprise businesses. This is my personal view. I'm sure government also indicated their ability, their willingness to basically provide that opportunities for public ownership compared to state ownership, while keeping certain amount of state ownership, but offering that part to public is the right move in my view. I think that's where you will have opportunities. And corporations, both public and private, will have opportunities to raise capital. Medium to long-term capital is something necessary for long-term investment. With the stability is now in place, with predictability is in place, but capital is where that's capital formation is very important. That's from the raising capital formation point of view. But from the other side, investor point of view, if you look at Sri Lankan investors, general public, what are the investment opportunities for the public available in Sri Lanka? It's still, as I said, a lot of even people, whatever their savings, they invest in fixed deposits or something in the banking sector. The reason that because they don't have that much of diverse investment opportunities, this is again an important element, important feature that we need to try going forward for people to invest their savings into diverse investment opportunities. Because instead of, here in Sri Lanka, if you look at the public sector, they have a social safety in terms of kind of government pension. As large public sector, they don't have this kind of safety net. the only way that these people, for their senior citizens or ages, is to whatever savings they have, they would usually do come in the bank and deposit and trying to live out of the interest income. That is not sustainable. That's where capital market developments, offering more opportunities for regulated capital products is important. I think there's a lot of opportunities also. And this is where, because there's a lack of investment opportunities in different diverse instruments, people get into scams, people get into pyramid schemes, people get into unauthorized deposit-taking businesses, and people lose their money because under normal, this kind of a multiple cycles, obviously market interest rates can't be very high, can never be double digit if we maintain inflation to 5%. So we have to have a situation where people get used to relatively low banking interest rates. Then what are the opportunities for these people to invest their savings and earn higher return for their living going forward, or for them to be able to have a reasonable high return? That is where one is obviously government securities market is one other alternative opportunity. That's also be part of market development. But more than that, I think corporate debentures, capital market, and regulated instruments by these capital market players there are a lot of opportunities, and that will give more opportunities, and that will good for the people to have a reasonable return. That's where I should look at out of the frontier market and emerging and advanced markets. I don't think a lot of all these countries, people live out of their interest income from their deposits in the banks. They can never be. There's a right macroeconomic situation. No one will be able to live out of the interest income, out of their savings, unless they have a huge amount of savings in a bank. This is where it's important to provide those kind of financial instruments. That's the responsibility of this forum, and that's why I think from the one side developing capital market and the other side providing opportunities for people. Even if you look at large institutional investors like EPF. So we manage the EPF. Right now, almost 95% of EPF, we don't have options, only to invest in government securities. So, but if the fiscal consolidation path going forward, I don't think EPF will have a challenge going forward to invest the savings of the private sector, huge, largest fund in Sri Lanka. But if we move into a capital market, right now the size of the capital market, or title stock market, if we move in 1%, there will be overheating of the market. So we need much more diversified, liquid, lot of the companies listed, good companies listed, even state-owned companies listed. Then that will provide opportunities for investment funds like EPF to diversify opportunities. That will provide opportunities for the market as well as for the retirees or for savings of the people for us to be able to give better returns. I think these are the things that I would like to highlight here. I think in the panel I can talk about the economy if you want, but I thought I would highlight these things. And from the foreign investors' point of view, all I can say is they are looking at obviously stability. If you want stability, you just monitor and look for any deviation from the stable paths that we have already government has committed to going forward. There's a deviation from the fiscal consolidation path, obviously there will be less stability. There's a deviation from the low and stable inflation, there will be less stability. If there's a deviation from the stability of the financial system in terms of banks, there will be less stability. And over and above, those are economic stability factors. I'm sure Minister can talk about the political stability. This is also important. With now the stable government is in place for next 5 years. This is what even last 2 years the challenge for us to maintain even economic stability with less political stability, changing administration. So that's even with that kind of volatile political or less political stability, we have been able to maintain that. But I think going forward with stable political system, I'm sure that part is also now in place. I think there's some opportunity, there's a way out, there's a clear path now. If the policy stability is there and political stability is there, I think there's opportunity for the markets to play the role in the next several years, decades of economic growth in Sri Lanka. Thank you very much.
Thank you very much, Dr. P. Nandalal Veerasinghe, Governor, Central Bank of Sri Lanka. Ladies and gentlemen, let's have another round of applause to the Governor of Central Bank of Sri Lanka. Thank you very much. Next, we turn our focus to the intersection of macroeconomic trends and key industry sectors. To provide a country and sectoral presentation, I now invite Ms. Rovini Fernando, Head of Strategy, Risk and Transactions at Deloitte Sri Lanka and Maldives.
Good morning, everyone. And my sincere thanks to the Colombo Stock Exchange and the Securities and Exchange Commission for inviting me to speak at this very important event. As a former participant in the capital markets, I was also a part of this industry some time back, and I'm very happy and pleased to see the enthusiasm and the positivism that has been expressed today. And I look forward to a very engaging conference. And it's very good to see so many people, especially foreign investors who have also come in to listen to us. So today what I hope to do in the next 15 minutes is to take you through and pick up from the speakers before me and to take you through some of the key trends and things to watch as investors. What are the important changes you will see in the economy, in key sectors, and overall that will happen, which will impact the earnings and the asset bases of the listed companies. What are the things that we can watch out for and look a little bit forward to what these changes are going to be. Can we get the slides moved down? Yeah, okay, sorry. Right. I'll just recap on some of the points made by the governor and the minister who spoke before. When we look at, and this is a reason for us to celebrate, because we see a lot of the key macroeconomic indicators have now recovered. We see good trends, and we are looking at a situation where the key macroeconomic fundamentals have now stabilized. In the first graph, actually, you will see the fiscal deficit, which is expected to be managed, and within the IMF program, we expect the primary surplus to actually rise to 2.3%, and this is something we are well on track to do. The important thing to watch is how our tax revenues will come through. And we are expecting, as given in the budget of 2025, for the import duties on vehicles in particular to augment the tax revenues. And this is a number that we will have to be carefully watching. When you look at interest rates, I think we have reached a position of stability. Many speakers spoke of this before. What we do need to see is that if our budget deficit and fiscal deficit remains in manageable levels, then you will also see interest rates remaining stable and remaining predictable over time. And if imports, now that vehicle imports and imports overall have been fully liberalized, we also need to see what kind of expenditure will come through on imports and whether that will have an impact on interest rates. And as the governor also mentioned, inflation is expected to pick up in the latter part of the year, and then we will have more sort of growth spurred on by that. And in terms of the currency, again, something to watch is once the imports are liberalized, to what extent the currency is going to move in that respect. So whilst we are very positive about the stability that we have reached and the strong footing that we are on, what we next look forward to and what we need to watch in 2025 is how is the growth going to come about. And this is really what I wanted to illustrate here. So we've had 5% of real GDP growth. We are back again to somewhere sort of at the pre-crisis levels when you really look at the GDP number. So from a low point, we have recovered. But at the same time, what we see is that from this point onwards is where the real growth starts. And to keep that going and to keep the momentum going, we see in the budget of 2025, the government has allocated a substantial amount of funds for capital expenditure. And that expenditure will be important. There is a list of a whole host of projects which are going to drive that capital expenditure, or where the capital expenditure is going to be used on. We would need to see that number actually coming through. But is that state-backed government expenditure, capital expenditure, adequate? Right. What we need also, and as the governor also pointed out, is to supplement this with more private capital, which will come into the system. And as well as to drive that, it's not just the private capital in Sri Lanka, but also to drive the FDI that would need to come through to augment what is available locally. So we think that FDI and encouraging FDI and the push towards FDI is also going to be quite critical. And also when you look at the list of capital expenditure programs that have been put through in the government budget, we can also see there were some new legal changes that were going to take place. For example, the Public-Private Partnership Act that's going to come through. And these are new forms of investment products, investment structures that will also help us to augment the amount of capital available in the local market to drive growth. So certainly, I mean, the banking sector and the public expenditure alone is not what's going to drive it, but we will also need to find new ways of activating the capital market as well as new forms of structures like PPPs to augment the pool of capital that's going to drive this growth. Talking a little bit about FDI, and I think this is going to be an important key driver of this growth. When we look at the neighboring countries and Sri Lanka, I would like to put it not in a negative sense to say we haven't got enough, but to say that we can get much more, right? And there is, if we do the right things, and we use the Board of Investment as a very active investment promotion agency. Remember that we are in a very competitive environment. For tourism, for exports, for FDI, for everything, we are competing with our neighbors, right? So if we use the right strategies and we target the right investors and the right sectors, then FDI can become a force for good. And this is where there is so much potential for Sri Lanka to augment its capital base through FDI. We saw quite a lot of initiatives again in the budget, which were put forward, particularly to drive exports and FDI. And one of these was the creation of new industrial zones. So while industry and manufacturing is not the only driver of growth, it is an important part of it. And something that investors will look forward to is having more ready-made, easily accessible, ease of doing business locations. And the initiative to create those industrial zones is very positive. And also to put into use some of the state-owned lands that are available, and this too was mentioned in the budget. With that resource availability and the policy consistency that we are looking to have, we will see that investors have more resources to work with, and there will be more ability for the country to bring these resources into productive use. The legislation that is being thought about, as I mentioned, the Public-Private Partnership Bill and other things which will help in ease of doing business will complement that. But I think these are important changes that have been spelled out in the 2025 budget, which will help us to go to the next level. And these are the things you should be watching for as you undertake your investment journey. Looking at the external sector, this too is another key driver for Sri Lanka, and we see a lot of emphasis has been placed on this in consecutive or various government policy statements, including the budget. And the current account surplus that we were able to enjoy was because we had certain restrictions in imports up to now, which have now been fully liberalized. So with vehicle imports being back again permitted, you might see the current account being challenged a little bit, but at the same time, we see new and emerging sectors which are augmenting the capital inflows to the country. And the sectors to watch in that sense are tourism. Of course, foreign worker remittances has been an important part of our foreign exchange inflows, but you will also see in the next slide, I have covered some of the new and emerging sectors in services in particular, which can drive this enhanced foreign exchange inflows. And a lot of the listed companies are undertaking projects in these sectors, and it would be quite interesting to watch how these companies benefit from some of these trends. So the port and logistics sector is a very critical one. We see new port terminals opening up, the government ones as well as the private sector-led ones, and you should see some good growth coming in these areas. The ICT sector is another where we see the availability of a skilled pool of resources, human resources, which is driving this sector. May not be very much represented in the listed companies, but again, something to watch. And some of the very positive policy measures that have been announced in the budget 2025 also will drive this movement towards exports. And one of the important things would be more free trade agreements with neighboring countries, because we may see other markets, our traditional markets in the West, being challenged, and hence more trade partnerships with our immediate neighboring countries would be also quite important, and the double taxation agreements that are being envisaged between, again, neighboring countries. And this, together with policy measures like the national single window, will again enable more and more people to participate in the export process, as opposed to the traditional few companies that were engaged in this. So the idea would be get more companies to be part of this export-oriented growth process as well. And with this push, both FDI and exports coming through, I think another important indicator we would have to be watching, and I think over the last 2 to 3 years, we've seen a significant augmentation of the foreign exchange reserves. So the country's position is becoming, foreign exchange position is getting stronger, and we are getting ourselves ready to be able to meet our foreign debt obligations starting from somewhere in 2028. And that is going to be a key indicator to watch. But the important thing is, ladies and gentlemen, we need to see all these different policy initiatives and different thoughts and different pronouncements coming and working together to make these indicators positive and useful. So someone spoke earlier of the ratings. These are challenging ratings when you look at international, in an international context. It's true we have come out of default, but we need to improve and work on improving these ratings even further. And that's when you will see more and more foreign capital augmenting. In the meantime, we need to work with foreign capital providers who are still comfortable working with ratings or a country with a promise and with a lot of initiatives happening, but which can work with the ratings that we have. So foreign capital can become a little costly, but this is a challenge and a thing that we have to work on in future. To support the changes that have been happening, we see a whole host of regulatory enactments that have come through. And these are going to be actually helpful in kind of creating a new and reformed and more modernized economic framework within which we will work. So last year, in the last few years, you'll see on the left-hand side some of the acts that were passed. Some of these are actually aimed at improving the financial sector stability, improving the banking sector, bringing in better discipline in the fiscal management process, and also reforming key sectors like electricity and the Economic Transformation Act, which looked at mobilizing trade, investment, and FDI. So there will be certain changes or amendments that the government has announced to be reflective of the new policies. But these acts and changes would be, again, key drivers of growth, giving the economy that level of modernization that is needed to kind of work in the new environment, which is much more competitive. So we might see amendments to the Sri Lanka Electricity Act and the Economic Transformation Act, but that's fine, and we need to go forward and ensure that the changes that we envisaged are actually happening. The budget of 2025 put forward a whole host of new acts that are in the making, and these again will modernize and enable more capital market participation. So I'll particularly touch on the Public-Private Partnership Act again. So the special purpose vehicles that would be created for public-private partnerships can actually be part of the capital market and look for new capital through other sources other than relying on public expenditure and the traditional banking sources. The capital market can get energized through the SPVs undertaking PPPs to when they come into the market in search of new capital. And again, as the governor mentioned, these are long-term projects. When you essentially look at capital investment, you're looking at a 15 years, 20 years. You're looking at long-term instruments, and which the banking sector may not necessarily be able to comfortably provide. So infrastructure bonds, green bonds, and other products that the market has kind of innovated now and brought in regulations for will be important drivers, and we should encourage these project companies to come and look for capital in other places. The Investment Protection Act will be again quite critical, as well as the SOE reforms that will be driven through the State Business Enterprises Management Act. So there too, we will see SOEs which require new capital to have the ability to come into the market and add to the level of activity in the capital markets. So these are some of the trends again coming from the regulatory changes that we can watch out for. The banking system is the cornerstone and the base for any good progressive economic activity. It provides the stability, it provides the grounding. Again, these are all central bank data which I'm quoting. You can see the ratios are improving, but we feel what will be the game changer or what can be something new and different is the banking sector and the non-bank financial institutions, many of which are listed, to actually tap into new areas of economic activity. Traditionally, they've been serving the larger corporates and the high net worth individuals and the very bankable population and institutions in this country. But where things are going to change is when you drive towards inclusivity, because actually if you look at it, quite a large percentage of our economic activity and employment is centered around the SMEs. So enabling technologies which will help banks and non-bank financial institutions to tap into this will be quite important. And several initiatives have been actually announced. For example, the reduction and the proposed gradual sort of lowering of single borrower limits, shifts towards cash flow-based lending, the new credit guarantee institution that has been created with the support of the ADB, initiatives, as was earlier mentioned, in sustainable finance, gender disaggregation of financial data. I think that was launched a few days ago, where you're looking at, again, increasing female participation in the economy, in the workforce, which is quite low for Sri Lanka at the moment. So all these changes and banks and financial institutions that can adopt new technologies, new methods of delivering services and products to embrace these emerging opportunities probably will see more earnings and more positive growth coming through. So the financial institutions to watch will be maybe the ones which can create a difference and a change here. Another two key sectors I wanted to touch upon was health and education. As we all know, the government has increased its allocation for healthcare and education, and these are the two pillars of the social fabric upon which the country has been built, and this is very critical for our competitiveness and for what Sri Lanka stands for. So it's two key areas close to our heart, but the public finance's ability to support these two sectors may be somewhat limited going forward. And therefore, again, another reason why we need innovative structures like PPPs to be able to bring in private capital to drive change and create opportunities even in healthcare and education by augmenting what is available with private capital. And I would like to talk a little bit on health. That is, we are grappling amidst the change towards or a transition towards an aging population. Non-communicable diseases are prevalent in Sri Lanka. It's quite a challenge to the healthcare sector. So in delivering that healthcare, the ability of the private sector to engage and bring in solutions effectively with the public sector will be quite important. Right now, you see many listed companies already engaged in local manufacture of pharmaceuticals. This is going to be a trend that is going to continue, and this will be a new source of earnings for these companies as well. If you look at the education sector, we all know there is a certain gap of students who qualify for higher education, for university education, requiring university placements, which the public sector is unable to provide, or is gradually increasing, no doubt, but it is not able to provide the full requirement. Therefore, the private sector's role in sort of providing affordable education opportunities to those university graduates would be quite important, along with the people who do not qualify for university. There is a large pool out there as well, who require vocational and other forms of tertiary educational training, because we do see now a lot of gaps emerging in our workforce for skilled people, right? We've had migration, we've had other challenges. So with that, and with an aging population, the employable population needs to be provided with the relevant skills. And that will be quite a important opportunity. I don't see a lot of listed companies engaged in the education sector. Many are engaged in the healthcare sector, but this might be a new area, again, which can be watched. Finally, just moving on to a few thoughts on the digital economy, which the government has placed a lot of emphasis on. So although we have a fair amount of digital penetration, internet penetration, and users of digital products like social media, actually our level of economic engagement through digital means is fairly low. So again, this is something that will get addressed, I think, as the government moves towards the digital ID, which will create greater financial inclusivity, plus also bringing in a lot of government pay or government services being digitalized and delivered through digital channels. And this can make a difference once again in driving the level of activity again at the grassroots level, bringing more SMEs also into the net and into the formal economic activity, because they have the ability to access digital products and financial services through digital products. So these are again going to be new and sort of emerging trends which we can watch for and which the listed companies eventually will benefit from. So just wanted to share some thoughts with you. There is a publication available covering some of these sectors in detail. I think the QR codes are on your table, so you can scan that and download the publication, which was put together by Deloitte and the Colombo Stock Exchange, giving more details of this. And happy to sort of answer any questions later if there are any. Thank you, everyone, and happy investing.
Thank you very much. Let's have a good round of applause to Ms. Ruvini Fernando. Thank you very much, ma'am. Ladies and gentlemen, as we move forward, let's keep in mind about the time a little, because we do not want to keep all of you waiting for too long for your lunch. And with that, it's now time for the very first panel discussion, which will explore the policy framework for accelerated economic growth. Now, this session will be moderated by Ms. Janet Rodriguez, Managing Editor for South Asia and at Bloomberg News. And let me cordially invite the esteemed panelists who will feature. They are the policymakers and financial leaders. Let me cordially invite the very first panelist, Honorable Professor Anil J. Fernando, Minister of Labour, Deputy Minister, Economic Development, Sri Lanka. Let's have a good round of applause, ladies and gentlemen. Dr. P. Nandalal Veerasinghe, Governor, Central Bank of Sri Lanka. Let's have a good round of applause. Senior Professor D.B.P.H. Disa Bandara, Chairman, Securities and Exchange Commission of Sri Lanka. And another good round of applause as I hand over all controls to Ms. Janet Rodriguez, Managing Editor for South Asia at Bloomberg News. Over to you.
To our distinguished panelists, good morning. Thank you very much for your time. And I hope to have a very engaging discussion with you today. Because, ladies and gentlemen, just some housekeeping notes first. My name is Jeanette Rodriguez. I've been overseeing South Asia for Bloomberg News for about the past 2 decades, based in Mumbai, India. And I can assure you that in South Asia, being fed is the most important part of our hospitality. So I aim to wrap up the session a little afternoon, but I also want to keep the final about 15 minutes or so for your questions to our panel members. So please engage with the panel. We've had a lot of facts and figures today. What I hope to have through this discussion is really to dig beneath those facts and figures, to the personalities managing Sri Lanka's recovery, to the people who will really take it to the dream that Sri Lanka has, to aspirations. And I want to walk you through plans for the economy, plans for the capital markets, as well as I said, open it out to any questions you all might have. So the first question really I want to ask Minister Fernando, to you. There was a lot of data thrown at us. I've crunched some data myself. The economy last quarter grew faster than economists expected. These are economists surveyed by Bloomberg, and the economy grew faster than they had expected. Your government also concluded the debt restructuring. Since then, you've seen the credit rating upgrades. Your dollar bonds have gained about 135%. They've returned 135% to investors over the past 2 years. The rupee has rebounded, Governor and Minister. The rupee has gained about 25% over the same period. That's roughly over two years. Global investors are 10% of Sri Lanka's stock turnover. That's more than double what the level was in 2021. So really progress on all fronts, Minister. But what would you say has made you the most proud when you talk about your own ascension to power and how you plan to run the economy?
The last point, I didn't get the last one.
What has made you most, a lot of achievements to tout, but personally, what has made you most proud?
Yeah, thank you very much posing the question and providing some statistics about economy and how the country is really reviving. Actually, we have been really proud of the contributing and the directing the public officials, agencies, and those who really work hard in pursuit of stabilizing. Because since when an economy is really down or collapse, what most matters is stabilizing. So we strongly believe that that has been achieved to some extent and slowly recovering, and we extend our fullest the support for that. And again, we see the convergence, so that is another area we would like to highlight. And in most of the governance, sometimes this divergence is seen. The politicians may have different the views, and the public authorities, the businesses, and likewise, of course, in a society we would see these kind of things. Now this convergence is happening, not at that level, but in a way it's happening. Our end objective from policy, the matters and the political perspectives are concerned to create or transform this society to a place where everyone can live in harmony from societal point of view, from investment point of view, to create a level playing field for everyone, the conducive environment for investors likewise. There are some other areas as well. So the economic policy is mainly to facilitate the value generation. So coming back to connecting to the stock market, like so here the investment related seminar, I would have to, I should say something about that as well. Would that be okay to say something? Again, from different agencies are concerned, you may have your micro level, technical level, and other strategies. But from political level, we pay attention on key areas. Number one is to facilitate the capital formation. No matter how we argue from different perspectives and ideologies, without forming the capital into investment, of course, we would be able to achieve is very little. In Sri Lanka, there is a huge gap between savings and investment. We have different tools, but the capital market also can do a great deal of job in capital formation and bringing that investment, the savings into investment with various products and other things. So that's one area where we focus. The other area is information. When it comes to capital markets, this is a little bit tricky and arguable. To be honest, the Colombo Stock Exchange, of course, in terms of technology, in terms of any other things, we may have achieved so much. But in terms of information efficiency, the market efficiency, lots of issues are there. So what kind of efficiency, like information that we are going to play with, deal with, because the level of the information, if you keep it in the hands of very few, then the opportunity is created for those who have the information to play in the market. We don't think that is going to be a good capital market. So information should be freely available, where the decision should be driven by some other factors, maybe very fundamental analysis or futuristic analysis, something like. So simply speaking, we need to look at this information area, because information asymmetry has created lots of problems. Of course, our end objective is like that. We know that cannot be achieved, but the reform should be taken towards that, and not to create such opportunities, maybe arbitrage opportunities or any other things, or the pockets where selected people can play. That's one area when it comes to that. The other area is in the capital, the formation. We know finance, money, capital can play a bigger role by investing. Investors want return. Then what kind of investors? What type of returns? There are lots of arguments, discussions are going on. And there is a little risk in the finance and the capital markets, since finance or money can play multiple roles. The robust role, invest them into the capital formation, generate value, get a return subject to the given condition. So then pumping the money into real economy. So that is our key objective. And if you compare the economies as well, in the past, production took place first, then the distribution followed, then consumption, then the value restoration, your savings, and the finance came last. Now, finance comes first. Finance initiates production, then distribution and consumption, and the value generation. So this is how the production mechanism has changed. If the capital or the finance works in that way to great extent, that is good. But at the same time, when we talk about investment, investors, return, investors may see some other opportunities as well.
Minister.
Yeah.
You're speaking about convergence and transparency,
Yes.
all very desirable topics. If I may have a question, I request a short answer from you, because I also want to ask Governor Veerasinghe about this. Transparency is always the aim of a good government. What are the concrete proposals that your government is taking to reach that goal of transparency, both for investors as well as civic society, to get the convergence that you really want?
Of course, just coming to that question, just I'll end the previous one. The other area is, so there is a little risk that money may like to play within the financial markets only to get a return rather than just pumping that money into real economy. We need to have kind of balance, and of course, the efficiency and the right reforms in the capital markets, maybe new products. I hope that new chair of the Securities Exchange Commission also may have lots of ideas. And if we can strike that balance, that will be all right. As far as the transparency, good governance are concerned, lots of things are already happening, and we are really contributing towards that already. Lots of legal amendments and new acts have been introduced. One of the, apart from the acts in the previous presentation highlighted, another act has been really presented to the table in the Parliament, that is the proceeds of the Crime Act that would be debated on 8th. Likewise, so we have introduced several changes, and we are highly committed to uphold this transparency and the governance. And we are working very closely with this AML, that anti-money laundering, and the financing terrorist the activities and other things. So what I say, even if these frameworks or the requirements do not come from different agencies or authorities asking the government to do the things, our government is ready to establish the transparency and to be held ourselves accountable. So that is our overall vision. Thank you.
Thank you, Minister. Governor Veerasinghe, a question to you next. The Minister raised some very valid points about governance, and the government has a supermajority. It can enact a lot of policies. But I've been covering Sri Lanka since 2 decades now, and I remember back in 2022, when there was no supermajority, when it was a government in strife, there was a lot of turmoil. I remember watching your speech live on television at that time. And it was a very bold speech. It was a very bold speech where you promised independent monetary policy in Sri Lanka. And it was supplemented by very bold action. You'd raised the policy rate by 700 basis points, which we'd never seen before in Sri Lanka. In short, Governor, you'd done what you had to do at that time. Going forward, what do you think the central bank in Sri Lanka needs to do? You spoke about policy stability, but there are still some concerns. Our economists expect the country to get out of deflation around June and go back to an inflation position. But there's still a turmoil in the FX market, for instance. Would you be happy with the rupee continuously appreciating? Would you be happy with the 10% appreciation like you saw last year? Or what is your outlook, especially for the currency and for broader monetary policy going forward?
Well, thank you. I think from the monetary policy point of view, I think I've been talking a lot about this new monetary policy framework, what we call flexible inflation targeting monetary policy framework, where our key mandates given by the government with the agreement maintain inflation rise at 5%, and for that we have a independence in terms of implementing monetary policy, using instruments to meet our objective. That's where our key instrument is obviously short-term interest rates is the one we set, policy rate, and then on that basis we certainly target inflation in the future 12 to 18 months ahead using that instrument. In the same framework, the exchange rate is also part of the monetary policy setting, where the exchange rate obviously under this flexible inflation targeting framework, exchange rate will have to be determined on the basis of market demand and supply, and also in line with overall market fundamentals, overall medium long-term market macro fundamentals. That is the important part the market will have to understand, the players will have to understand here. We can never have a system, a regime, where exchange rate is fixed or exchange rate is targeted at this level. Exchange rate will have to be flexible, but not so volatile. We don't want kind of a exchange rate moving up and down on daily or monthly basis like we had in 2022. We need much more predictable kind of exchange rate regime, which is competitive, which is in line with macro fundamentals, and also people can make positions and take positions in terms of the predictability of the exchange rate. That's why I tried to explain the determination of exchange rate. The regime is basically what you need to look at some of the important presentation that was made. The 2 years of current account surplus we had as a result is obviously currency had to appreciate a little bit. And going forward, I think in Sri Lanka, historically we have been running very large current account deficits. That's part of the reason why we had the continuous depreciation exchange rate. We want to maintain a stable exchange rate. We need to maintain a stable, low current account. At least I think we can easily manage a small current account deficit, but 1%, 2% we can easily manage with some financial flows. But if it's going to be 3, 4, 5, 6%, that's where that has to reflect in the exchange rate. Otherwise, there's no way currency can be fixed or defended at what level. So that's a fundamental principle of maintaining currency. I think looking forward, I can say even this year with all the recession now we have removed, so even with that, I think we see either right now the balanced current account or probably a small surplus even this year. This is a fundamental change from the history. I think this is a fundamental macro change, where if you look at historically, Sri Lanka has been a twin deficit country. When the fiscal running a large fiscal deficit or running a large government debt, obviously that will reflect in the current account as well. So twin deficit means large fiscal deficits will translate into large current account deficit. But this is the result of continuous fiscal consolidation and maintaining primary surpluses. That also will reflect on the overall macro fundamentals in terms of low current account deficit, more savings and more internal savings generation, which will ensure the stable currency going forward. This is why it is not only the central bank responsibility to maintain a stable currency or maintain a balanced current account or a sustainable current account. It is linked with the other important macro key player is the fiscal policy. So as long as fiscal is on the right way, I can assure that we will have a stable, predictable currency in line with the macro fundamentals and demand and supply. That market will have to play that role.
Thank you, Governor. Before we dig into the capital markets, another question for the Minister on the fiscal, because the Governor spoke about fiscal and monetary policy working in lockstep. Minister, your government does have a mandate from the people to really improve their lives, to give them a better standard of living, to tackle the problems that Sri Lanka has had in the past. However, you'll also have the constraints of the IMF program, you'll have the spending limits. Your government has had to think creatively in terms of how they provide relief to the people in terms of VAT, etc., and the various taxes. How do you see this balancing act that your government has? How will it continue to spend carefully to keep the fiscal in place and really continue the discipline that is needed to see the IMF program through till 2027?
Thank you. A simple answer. So how we did it and how it happened is the pure demonstration of the financial discipline and the prioritization. So, and connected with your political will. Yeah, it is true, and it is fact that we are working at this year, maybe a couple of years to come, with certain the fiscal constraints and subject to these IMF constraints. We manage anyhow to look at the situation and prioritize the things, and where we identified, among other things, how best we should really allocate our funds while minimizing the wastages and maybe non-value adding activities and not urgent the capital expenses and all those things. We met few targets, the prioritized targets. One is to meet the minimum threshold for the capital expenditure, because that is must. When we look at the previous budgets, of course, sizable capital expenditure were there, but the actual expenditure was almost, on average, over the last the decade, the 50%. So we want to, we have a challenge, but this time we allocated, we couldn't exceed the minimum one, though we wanted, since there are lots of constraints. That was that is 1,315 billion rupees. That is the minimum threshold. We allocated it. Now we have a challenge, and we would be really working to achieve it, because that creates more value, and this is how the economic opportunities would be opened up. And coming to social spending, that is a prioritization, and on the one hand, and on the other hand, if you just look at the social justice and the social stabilization, the majority of people in Sri Lanka are really struggling to live. If you just take even minimum salaries, and so we increase the public sector salaries also by a very significant percentage, and but even after increasing, it is well below the minimum. Not the minimum salaries, but if you just take the average living wage, can people have a decent life with that? That's not. But therefore, we need to provide a kind of stimulus for them. On the other hand, build their confidence also. We are also recognized. We need to contribute to the economy while creating opportunities in the economy to engage in the economic activities, whereby empowering them. So this is the target. In order to do that, we allocate a certain amount of money for essential infrastructure as well, especially the rural road development, bridges, likewise. So we are trying hard to push the benefits of the infrastructure to the grassroots level, while allocating some money for more essentially important areas such as education and health. So this is the overall idea. So we'll hope that the outcome would be very positive, and we would have more fiscal space in the years to come.
Good luck, Minister, with the policies. Professor Disabandra, I want to turn to you at this point. The capital markets obviously need to work very hard to achieve what both the Minister and the Governor have laid out. Sri Lanka was a pioneer at its debt restructuring, because there were certain instruments that were announced that offered a benchmark for other similar frontier markets that were in debt distress. You have similar instruments now coming up. We spoke about the Sukuk, we spoke about the green bond. When could we see Sri Lanka, the sovereign, issuing its first green bond? Green bond.
Yes.
When could we see the sovereign issuing the green bond? And what further reforms do you think Sri Lanka needs to take up to deepen the capital markets?
Yes, very recently, CSC and SEC worked very hard, and with the help of ADB, we have the framework. It's already there. And 2 companies came out, and they were very successful. So third one, most probably the commercial bank. So that will come with another green bond. So that's, as far as I know, is 15 billion tier 2 capital. So now I think there's a trend, and we had just equity and debt. Now within debt, we can see different new products. And we have already approved the basic rules and the foundation for social bonds as well. So I think there are some companies there in the pipeline. So it's I'm very positive towards accepting many companies. I think Sri Lankan corporate sector is not very familiar, or they are not utilizing debt. So I think it should be place for them to attract more additional funding and all. So for that, they must be ready. So I think in the past, what happened was a kind of very low level of literacy in that area. So I think now SEC and CAC, we are working together to educate and familiarize these products among corporates as well. Yeah.
Thank you, Professor. Governor, companies in an economy are often limited by the sovereign rating. Are you engaging with the credit rating agencies for a higher rating? And also, I want to ask you, when would the sovereign expect to return to the capital markets? You did mention you expect access before 2028. But is there a plan to return to the global capital markets?
Yeah, I think important question on the ratings. Obviously, rating is a kind of a outcome of good macroeconomic management, and the outlook is all what they're looking at: external vulnerability, social indicators, and also economic indicators. So, what we have seen so far, because we come out of this default status, now we under kind of triple C status. I think next movement in the rating, what I would expect, not too long, especially as I mentioned earlier, fully implement the debt restructuring process, where still government obligation, small part is with the Sri Lankan Airlines, because government obligation guarantees there, still that part is basically preventing a further movement in the rating. So that's short term, what I see. I heard from the minister that they have appointed the company, so they are engaging in the discussion. I hope that will be completed soon. Once we completed that part soon, I think we are set to move ahead. Next ones, we need to ensure that we move in the right path. I'm sure going back to kind of ratings, we had at least above C grade, going to a B grade. I don't see this a big challenge. I think it's difficult to predict the time, but if you move in the right direction, it's within a couple of years, in my opinion. It's not too far away. In terms of market access, I think that is important decision government will have to make in terms of external financing of the budget deficit. So when you look at the historically, government sovereign went into the markets and access capital markets, that it went, the good part is that now capital expenditure or whatever expenditure is very carefully managed. So in that kind of scenario, I think going forward, once you get into a rating back to B grade, I think we will have market access. Question is that having market access is one thing. It is very important for us to be able to access markets. But the decision whether we go to the capital markets and raise commercial borrowing is a completely different decision government will have to make. For government to make that decision, I think there are a lot of things to look at. What is basically mainly the government financing needs, gross financing need for next several years, and how much can be raised locally if we are running kind of a balanced current account surplus or small deficit. I think there's a space for the government to raise large part domestically without going abroad, especially on commercial terms. Because the government will certainly get some multilateral lending continues, we will have that, but I don't think, in my opinion, if government moves in the same direction, I don't see government need to go to the capital markets even in 2028 to finance a budget deficit, because some amount of multilateral financing plus the balanced current account will provide sufficient savings, internally generated resource mobilization to finance the smaller budget deficits going forward. That is my kind of a view, that I think that should be the way forward. But it's important to have the market access open at any time if needed. For example, any unknown shock, any unknown geopolitical thing, any unknown external shock, obviously government may need to access capital. Country may need to access external markets. Important one is to get ready, get the ratings up, have the access to capital markets ready. But the decision to go to capital markets is certainly, I think I certainly would not encourage government to, although access is there, without the need, government should not raise. And on the other part, the question you asked on the sovereigns issuing green bonds, I think to me, the private sector obviously already has a taxonomy by the SEC. We also issue financial, the regulatory interest taxonomy. The private sector now, in Sarakyan, the readiness is there for them to raise sustainable financing instrument. For the government, the sovereign, I think first opportunity, as I can see, is the after restructuring. This debt source nature is, I think, way forward. But still, that is a decision government will have to make, depending on, that is a better form of medium to long-term financing for the time being, without going to full commercial, external debt. I see there's opportunity. There are a lot of inquiries coming, a lot of interest for Sri Lankan government sovereign to issue debt source nature. Then they can raise that money to support the sustainable part of the development for the public investment. I think there's opportunity, but still that's a decision probably the minister will have to make, or the government will have to make.
Thank you, Governor. A very fair and very insightful answer on the difference between the ability to have market access versus the decision to actually tap the markets. In terms of market access, I want to turn to you, Minister, because the privatization of Sri Lankan Airlines obviously is a big hurdle there. I myself flew into Colombo this time on Air India. Formerly, a state-run airline sucking up a lot of taxpayer money, and today run privately after the government decided to take the tough decision to privatize it. What is your government's thinking on privatization? And also, if you could update us on the status of the Sri Lankan Airlines deal itself.
In fact, we need to get the definition of privatization. Privatization means publicly owned entities being sold, simply speaking, if that's the meaning. And we have to understand the issue that we have as of now with regard to these state-owned enterprises as of now. So there is a role for some state-owned enterprises, so we have to accept. But the present level of the number of state-owned organizations and their status are a real the outcome of the long-term the practices and the government policies. I'm not going to just criticize or say something about that, but it is a fact that due to some other reason, these policies have not worked in a proper way to use these state-owned enterprises in such a manner, either to create value or to monitor or govern the markets, or to use the public finance in an appropriate way. So now we face a problem. Of course, we agree that the public money should not be wasted if it is not relevant. So that government policy is to carefully study. There are large number of institutions. Of them, some institutions are active and critically important, may have big relevance to the markets. Likewise, now a separate team. Of course, we are going to establish separate the committee on that. Some people are already working on that. They'll come out with the appropriate solution. And we have not directed to do that or this. It is up to them in the pursuit of achieving these objectives. So where we have given the guidelines in a way, what we want, if a particular SO is really needed for the economy, to have a kind of balance in the market with a view to increase the market efficiency rather than having market failures. We know that in market sometimes, no matter what theories talk about, lots of market failures are there even in the well-established, highly developed economies. So economy cannot be really measured in numbers. It is not deterministic. It is natural and sociology, everything is involved. So that we need to look at this, the significance, if there are relevances, look at how best SOEs can contribute to increase the market efficiency and monitor the market, and not to do the business, because sometimes there's a wrong idea that the governments, because we do not have any idea of having state-owned enterprises and doing businesses and earning profits. But in the course of doing or engaging in these the processes, there may be surpluses or any other things. Our whole idea is to create a level playing field for the investors and building the investors' confidence, because unless the investors' money, investment, as I just earlier highlighted, finance, capital, doesn't come to the market, we can't think of improving the productivity of the business. So this is our whole idea. Now restructuring is going on. And with the reference to specific questions you ask about Sri Lankan Airlines, we would see what would be the best course of action. We look at the restructuring, therefore the selling off of one asset or privatization or changing the management or amalgamation, like there would be a vast range of alternatives. We believe in alternatives. We take the best course of action, I just told you, and we'll wait and see. And otherwise, we do not have any predetermined thing. So this would be sold, this would be kept like this. Thank you.
Professor Disabandra, while Minister Fernando's panel decides on how to restructure these state-run enterprises, how could these companies really access the markets, the capital markets? What do they need to do, and what do the other loads of Sri Lankan companies need to do to get capital market ready, to get IPO ready, to list on the stock exchanges?
So you are referring to general companies in general. Okay. Oh, SOEs.
Referring to SOEs?
Okay.
Yes.
Very good question. I think it's very good in front of Minister you raised this question, because most of the people raised the same question. Even this forum in the morning, several gentlemen asked this question. So I think Minister very clearly mentioned, now for all these SOEs, there's a board or responsible people mechanism. So they will come out with whether it is listing or whether it is any other kind of restructuring. So they will come up with that. But it is very clear from our side, we have the catalyst board in our exchange. So, and they are ready with all the mechanisms. So if any company, SOE, is willing to list and create, they want to formulate capital through the capital market of Sri Lanka. So mechanism is ready. So only thing is, there are minimum criteria to be satisfied. So under Catalyst board we have mentioned. So and the same time it's a separate board, not like other. So therefore there are some relaxation regulation wise. And we know it is government entity. So not the 100% capital formation from the market. So that's a part of it. Maybe 20%, 30% likewise. So the government ownership will be there, but part will be with the capital market funding. So I think it's the efficient way of maybe in a way cheaper capital. And at the same time, not only the capital formation. Now when they come to the capital market, the transparency and their responsibility as government body. So they have to the governance mechanisms. Everything is transparent. So that is the beauty of coming SOEs into the capital market and formulate capital through the Sri Lankan capital market. So the systems are ready, rules are there. It is up to the government, the SOE, to decide. So whether they use this tool as the restructuring mechanism or something else. So it's very clear. The assessment must be done by the entity level. So then as it's in line with the minister's thinking and the explanation, I think. So other than that, there's no list identified. This should be listed. So and again in Sri Lanka there's a bit confusion, privatization and equitization. So privatization is a different one. That's why I think the minister said categorically, privatization we had a definition. Now if you take some other countries, now Vietnam, so they are using a tagline called equitization. So you can use equity to a certain level and you can strengthen it. So I think, it's message is very clear. Even that was in the morning, Deputy Minister mentioned about this, and the Minister, Professor Anil, also categorically mentioned that the government wave is for. The only thing is, mechanism must be determined by the responsible body. So then we are ready. So that means that that's a good message to the forum. So in time to come, there will be several SOEs in the capital market. So that will add some liquidity. So that's a good news for the investors. So carefully we can think of that. Only thing is, government entities must understand. So they must clean their accounts and come to the market with minimum requirements. So I think it will be a good opportunity for local and foreign investors. Thank you.
Thank you, Professor. I think the message from all the three of you is very, very clear. The economy needs innovation, and the policymakers are working very innovatively to really keep that discipline that's needed. But also, convergence. But also, it's a country that needs equity. Debt, we've gone through a cycle of debt ballooning and debt crisis, and going forward, debt will be more thoughtfully used. But equity is really the need of the hour. Equity is the buzzword. At this point, I want to open it out to our audience for any questions to grill the minister and the governor and also the SEC chief in terms of how they're going to race for this equity. Someone will come over the microphone. If you could just raise your hands if you have a question for the panel. There's a gentleman there, right there at that table. If someone could hand him a microphone, please.
Minister, this question is to you. Back in the day, say the 2010 government had a clear headline for their strategy to develop the economy. They had a 5-hub strategy plus tourism. The following government also retained some elements of that. So my question to you is, what is your headline strategy for economic development? What is your elevator pitch in, say, 20 words or 30 words max?
In relation to what? Tourism? Oh.
No, if you recall, the 5-hub strategy involved an aviation strategy, a maritime strategy, commercial strategy, and there were 2 others, if I recall. So it was a 5-hub strategy plus tourism, right? That was, I believe, the Mahinda Rajapaksa government in 2010. The following government in 2016 also retained certain elements of it. Maybe we changed the names here and there, but broadly the strategy remained. So my question to you is, what is your government strategy for economic development?
Right.
In a very, basically the headlines, right? In a 20, 30 words.
Sure.
What's your elevator pitch?
Yeah, sometimes it's really difficult for me to explain things in few words. Anyway, I understand within the purview or the caption of, as just earlier highlighted, the creating a level playing field and a conducive environment for investment. So we are going to facilitate for sure. But again, as you highlighted, we need to prioritize certain things. In the sector, aviation and trading, naval and all these, of course, we are really working on to really see the opportunities and unleash the opportunities for the private sector to invest in those areas, aviation, naval and energy sector, looking at the 2050 target of the renewable energy. So likewise, there are other areas as well. These are key priorities in the service sector as of now.
So you want to energize Sri Lanka from all angles, Minister. You want to energize it in clean energy as well as energize the private sector to do more.
Yeah, of course, the clean energy, actually not only the clean energy, the world is moving towards the green investment, green jobs, green opportunities. So that's the reason why even earlier the Professor Disa Bandara also highlighted about green bonds. What matters in the future is, among the other things, is the sustainability, how best we could achieve. So therefore, green investment and green financing would find new ways, I suppose, in the future. Thank you.
Thank you, Minister. Someone forgot to send President Trump the memo that the rest of the world is moving toward green. One final question from the audience, please. Come on, someone. The gentleman at the extreme.
Thank you very much for the opportunity. It has been an excellent conversation, very insightful. My question is for the chair of SEC and the minister. I would like to know what is the size of the institutional investor segment in your capital markets. Typically, insurance sector and the pension fund sector are considered to be two important institutional investor segments which have long time horizons and which prefer to invest and stay in the capital markets for a long time and ride through the ups and downs of the capital markets. So could you tell us about the size of the insurance and pension funds industry in your country?
Yeah.
And whether there are any plans to fast track the growth of these sectors?
I think I can answer your major part of your question. If you take Sri Lanka's financial sector, it's 120% of GDP. Total GDP, total financial sector. That's 102 to 103 billion US. Total financial sector. And if we take out of that, 67% is banking, deposit taking, and 15% is superannuation funds, and another 13%, that is 12.98 billion at the Central Bank of Sri Lanka, and 3% is the insurance. 3%. And less than around 2% is the special financial institutions. That's the composition.
I hope that answers your question.
The insurance sector seems to be small. Are there any plans to fast track the growth of the pension fund industry and the insurance industry in your country so that they can become bigger players in the capital markets?
Yeah. I think we have the insurance regulator. I am not regulating insurance, and I think my gut feeling is insurance sector is growing, and we have a great demand. And almost all the insurance companies are doing well. So that's one, simply what I can say. And regulatory perspectives and the development angles is not aware. But at the same time, superannuation funds, that angle will, I think the central bank governor will address because it's under his purview.
Go ahead, Governor. Go ahead.
Just to add, I think it's an important question that he raised is the in the market capitalization, there are long-term, there are no kind of a liquidity or exposure into medium to long-term kind of insurance and superannuation fund. That's a question. I think in terms of what I see from those sectors, there are huge potential here. For example, if you look at the insurance sector, insurance penetration is quite small compared to a lot of other even frontier markets, because insurance penetration, it tells us there's a huge opportunity for insurance sector to expand, and for them to basically more active and be a part of the the SAC, I think one of the issue again is part of this, if you look at the Sri Lankan insurance sector, I don't have numbers, I think larger player is the state-owned insurance business. And then you have a smaller, relatively small other private sector insurance, some are listed. But compared to the sectoral breakdowns, the insurance sector is not very significant, partly because I think in my view, insurance has a lot of potential. Insurance penetration will have to go more general and the other part. And secondly, partly the large state-owned ownership has not come into the capital market. So I think those are the two things. Once there's an opportunity to be listed. Superannuation funds, I don't think we have any superannuation funds listed here. In fact, it's the other way around. Superannuation funds basically needs to have opportunities to go into the capital markets and provide returns to the members. These are from the other side. But I'm not sure whether we have any superannuation fund listed in Sri Lanka. It's a very small, unregulated. The largest one is CPF, that's managed by us. Others are quite small, and they are basically looking for opportunities to diversify investment.
Thank you, Governor. In the interest of time, let's wrap up this panel now. But to close, I want to ask all of you the same question. Very briefly, in just a few words, one sentence maximum. What is your biggest policy priority for the next year? Let's start with Professor Disabandara and move this way.
I have to say two sentences. One is demutualization is one of our priorities. Then the second one is digitalization of most of the platforms, enabling digital assets to come in. Yeah. So therefore, I'm appealing the companies to come with digital assets, and that will add lot of liquidity in time to come, and it's easy, and we can win the next generation.
Thank you. Minister, one sentence. What is your policy priority for the next year? For this year, in fact, 2025.
Simply, the promotion of trade and investment in pursuit of generating value, plus the maintaining clean politics. That assurance can be given across everyone in our political sphere.
Thank you, Minister. Governor, you've had the longest time to think about an answer for this. So, a lot of pressure on you.
The answer is simple. As central banker is always for the future ever is the stability. Price stability and financial stability will have to be the priority for any central banker. It's same for us.
Thank you, Governor. For our audience, you know the policymakers' policy priorities. So please hold them accountable to these policy priorities. When you have the forum the next year, please go back to each of them and say, this was your priority. How have you achieved on that? That's what keeps society accountable. That's what keeps us all running. Thank you very much.
Ladies and gentlemen, can we have a bigger round of applause to our panelists? And I request all of you to remain on stage. I request the panelists to remain on stage as we would like to present you with a token of appreciation. And to do the honors, I would like to cordially invite Chairman, Colombo Stock Exchange, Mr. Dilshan Veerasekara. Ms. Janet Rodriguez, we also want you on stage. As you have done a splendid job as a moderator, we have a token of appreciation to you as well. Thank you very much for engaging in an insightful discussion in our very first panel discussion and helping the country move forward. Let's give another good round of applause, ladies and gentlemen, to our first set of panelists as we explore the policy framework for accelerated economic growth. Thank you very much. And now it's time we move to our second panel discussion of the day, focusing on leveraging economic growth for a robust capital market. Now, this session will be moderated by Dr. Naveen Gunawardana, Managing Director and co-founder of Linear Wealth Management. And let me now take the pleasure of inviting our panelists. I would like to cordially invite Mr. Dilshan Veerasekara, Chairman, Colombo Stock Exchange. Let us start applauding, ladies and gentlemen. I told you this is your easiest way to keep yourselves warm. Mr. Matthias Martinson, Founding Partner, Chief Investment Officer, Tundra Fonder AB. Let's have a round of applause, ladies and gentlemen. And we also invite Mr. James Johnston, co-head of the Red Whale Emerging and Frontier Markets team. Round of applause. Let's keep applauding, keep applauding. And also invitation goes out to Mr. Ray Abhivardhana, Managing Director, Group CEO, HNB Investment Bank Private Limited. Round of applause. And Mr. Dumit Fernando, Chairman, Asia Securities Holdings Private Limited. A very warm welcome to the panelists of our second panel discussion today, focusing on leveraging economic growth for a robust capital market. And with that, let's give a good round of applause to Dr. Naveen Gunawardana, Managing Director and co-founder of Linear Wealth Management, as he will take this discussion forward as a moderator.
Thank you very much. Good afternoon, ladies and gentlemen. The topic of this panel's discussion is leveraging economic growth for a robust capital market. I have the tendency of deviating a little bit away from topic, but I'll try to stick to topic in this discussion. I think we can all agree that Sri Lanka's economy has stabilized following the turbulent path that we've been over the last couple of years. The economy grew 5.4% in fourth quarter of last year, and it grew 5% for the full year. And if the new government continues with the IMF program and some of the key structural reforms that we have put in play, particularly the Central Bank Act and the Public Finance Management Bill, I think we can agree that we should be in for a period of relative stability. But we've got to remember that the growth that we saw last year was on the back of a contraction. And as the economy moves from a contracting economy to a growth economy to a normalized economy, it'll be a little bit more difficult to hit those numbers. In terms of inflation, we are currently going through a period of deflation. Our view at Linear is that inflation will pick up in the second half of the year, and we'll probably end the year at little above that 5% target set by the central bank. With credit growth picking up, one would expect to see interest rates also picking up, particularly the bank interest rates. But as long as the government runs a positive primary surplus, it is very unlikely that we will see the interest rate shocks that we saw in the 2011-12 and the 2015-16 cycles. So we should be looking at a period of relative stability in interest rates. On the external front, our house view is that we will probably have a marginal current account surplus for this year. That also tells me that we should be looking at a relatively stable currency as well. But we also need to be aware of the potential external shocks. We have a very interesting gentleman occupying possibly the most important seat in the world. My personal view is that President Trump's may be a positive for Sri Lanka, but I'd like to hear what the panelists have to say. So it is in this macro background that I would like to frame today's discussion. I would like to put it into two parts. In the first part, gentlemen, I'd like to talk about some of the policy measures that have already been implemented and some of the structural reforms that we would like to see the government doing. And in the second part, you have 3 fund managers and 3 broking houses represented here. We have to talk about markets, and I think that is what everyone is expected to hear. So, James, where are you? There you go. If I could start with you, if you look at some of the key policy measures that have been implemented by the government, what are 2 or 3 policy measures that you are excited about? And what are certain reforms or policy measures that you would like to see the government implementing?
Well, I think as we said in our initial, your words and some of the presentation that I gave, and we've been through a classic macro transformation and stabilization plan with the IMF. So I think, yeah, we've seen the implementation of an incredibly difficult process to go through. And the result of that is, we've been hearing today from the central bank governor and from the minister, that we've got an economy that's now back on its feet. What we always look for is policy stability. We look for strong FDI, we look for strong remittances, we look for strong employment creation, and to put that into policy is the most key part, I think, of the economic transformation that you want to see. So I think everything that's being done is fantastic. As I said many times, I think a cheap currency is the most important part of many of the long-term success stories we've seen. We talk about Mr. Trump. In our world, frontier market world, stock markets are a popularity contest of the government. I mean, we often say that we look upon the government of the relative countries that we assess, kind of like we assess companies. So the president is the chairman, the prime minister's the CEO, the central bank governor's the CFO, and you just want to look for consistency of policy making. And I think Sri Lanka gets full marks on everything. Now, the trick is not to destabilize that. You look what's happening around the world. The new president in Indonesia has done nothing wrong, but the stock market's gone down 50% in the anticipation that he might do something wrong. So markets are very unforgiving and will punish potential mistakes even if they've not happened. We saw in Turkey over the last week that an actual political destabilization can lead to stock markets falling 40%. You look in Argentina, that's probably the most persuasive popularity contest of the last year or so. President Milei has upended 7 decades of policy disruption in Argentina, and the stock market was up 500% in dollar terms. So I think everything's in place for Sri Lanka. It all looks wonderful. The one thing you're missing is foreign investors. I would argue you don't actually want us. Normally we turn up at the top. We'll normally turn up when it's gone up 500%, and all of you lucky local investors can sell to the idiot foreign money that comes in at the top. I think the key point that the question from over here as well about, I would love to see committed domestic pension fund money being forced by the market. You've got a very young population. You don't have to pay many pensions for 30, 40 years. Australia has $3.5 trillion of pension fund money to support 28 million people. It's kind of the same size as Sri Lanka. There's not $3.5 trillion trying to buy a stock market today that's worth $15 billion. So I would love to see some very dedicated, forced long-term pension fund buying, because it's ridiculous. I mean, the valuations are ridiculous. And I'd much rather Sri Lanka and Sri Lankan potential pensioners make 700% returns owning Sri Lanka for the next decade. I'd love my clients to participate, but we want to get some really stupid money to come in at the top and buy it all off us.
Matthias, if I could put the same question to you, please.
Well, I think I travel a lot in our different frontier markets, but recently, last year, I visited India again for the first time in over 10 years. And kind of what was striking to me was kind of to hear the arguments for investing in India being the same that we kind of rolled over and over again for all emerging markets 25 years ago, kind of when there was this investors mainly just saw the opportunities and kind of ignored the risks. We haven't really seen the major crashes at that time. What India has achieved, rather than, and then what almost no other emerging markets has achieved, that's stability. I think that's the key differentiating factor. So I think what James was discussing here, that the first and foremost is to ensure that kind of the fiscal responsibility is there, that you don't kind of tamper with the investors' trust again. Because we already have the reset of the economy. We have kind of a low base to start from. We have kind of the major imbalances cleared out. So if we have a stable environment, I think the corporates can do the main work ahead. Outside that, things that I would like to see, and I'm sure that's something that's already worked upon, and we heard that in the Deloitte presentation as well, that there is some thinking around public-private partnerships, because we are from the equity market, but we need to understand that this is a small market. We also need kind of the major investments. I would love to see some infrastructure projects in a PPP model, for example, with the airport or with toll roads or something similar. I'm sure that there's a lot of work going on that, because that's also going to filter down to the economy as a whole. It's going to kind of show that it's possible to make these necessary infrastructure investments without putting kind of the fiscal side in jeopardy again.
Thank you. Jumit, if I could move to you, putting on your hat as an investment banker, do you think domestic capital markets are actually playing a role in the development of the economy of the country? If not, what do we need to do to ensure that they do?
Yeah. Thanks, Naveen. I think I'll try to bring together a couple of different points that have been made on this panel and previously as well. The short answer is I think it's not doing enough. And I think, I think the topic of this panel was economic growth leveraging capital markets, or the other way around. But I think the real question is how can, so it was capital markets leveraging economic growth. But actually, we need to reverse that question, which is how can capital markets play a role in economic development, or how can economic development leverage capital markets? And I think to that extent, we are scratching the surface at the moment. I think we have had an equity market which the numbers will very clearly suggest, if you look at it by market cap to GDP or any other metrics, it's still minuscule. And I think the factor that James touched on, which the governor touched on as well, we have large savings pools. We have pools of assets. They're just not in the right place for growing the economy. So pension funds, I completely accept the governor's point that if they brought in a small amount of EPF funds into the market, it might overheat. But that's because they will all be on the one side of the trade. I think what needs to happen is true deregulation of these large pools of assets. It is not just saying pension funds need to come into the market. They need to be deregulated. They need to be managed through very different views. And then you'll see an active trading market, which will allow the likes of James and Matthias to bring their large funds with the right amount of liquidity. So once you do that, I think you will see that the appetite for capital formation through the capital markets will be much higher. And I think the criticality of that is also important to understand. I think, James, you talked about the post-Asian crisis growth of some of the Asian tigers. If you really look at what happened in the Asian crisis in 1997, I'll take two examples. Thailand, which was the epicenter of the crisis, their investment to GDP went from 40% to 20% in 1997. In Korea, it went from the mid-30s down to about the 20% range. Now, what they did right through policy frameworks and restructuring of the economy, they turned around that investment ratio. In both countries, it went back up to the 30s. Now, that is how you build a sustainable economy. Otherwise, it's a demand-driven, consumer-driven economy that has high consumption and is very fragile. That is where we are today. We have high teens investment to GDP growth rates. And part of that is the lack of availability of capital. So the short answer to your question is it's an absolutely critical role for capital markets to play. To make it work, I don't think it's a lack of supply of assets or capital, it's just that they're trapped. They're trapped in things like pension funds, which all over the world, you take Malaysia, there are multiple pension funds, privately and publicly managed. So having a right regulatory framework is, I think, what the policymakers need to do, not to prevent it falling into potentially private asset manager hands.
Thank you. Dumit, now that I got you, I'm going to put you on the spot. The question of Sri Lankan Airlines came up in the last panel discussion. You're on the board of Sri Lankan Airlines. Would you care to comment on some of the comments that were made?
Sure. Well, I think the question of selling or listing Sri Lankan Airlines as the holding company is a moot point. I think when you have a negative 1.4 billion net worth, I don't think any government or any owner is going to feel that they got a good deal, however you sell it. So I think there's a period of us having to restructure it, and I must say I agree with what the minister said, and which is that our conversations, and our line minister now is the finance minister, which happens to be the president, and His Excellency the President's take on this is that he wants pragmatic solutions. So to kick around the idea of, say, privatizing Sri Lankan Airlines, as I said, is a moot point right now. It's not the most value-enhancing plan for the citizens. I think what we will try to do is look at all the other cash-generating assets and think about what we can do with those. We will certainly need to look at options to, of how we restructure that balance sheet. So all I can say, or I'm free to say right now, is there has been a huge amount of flexibility shown in the approaches. It's been left to the board to come up with ideas on how we can structure it, and I don't think capital market solutions are out of the question.
Dilshan, I'm going to put you on the spot now. I think Dumit pretty much said that there's a lot more that we need to do from a capital markets point of view. Putting on your hat as the chair of the CSC, can you talk about some things that the CSC have done or are doing in the pipeline? Perhaps you can also talk about from a governance aspect as well. Governance is becoming a very key criteria, particularly foreign institutional investors when they invest in markets. I know the CSC has done quite a bit of work in terms of trying to enhance the governance framework. I noticed in Matthias's presentation that while Sri Lanka scored high on social and environment, we were not that great on governance. So perhaps you can comment on that.
Sure. Thanks, Amit. So I think for me, really, there's two key criteria that why an exchange exists. And one is to operate a free, fair, efficient market. But even more than that, more importantly, is capital formation, enabling capital formation. And if you look at historically, we've had our problems, even market cap to GDP, we are around 15%. There's a lot more to do. But over the last, I would say, probably 5 to 7 years, the exchange has progressed quite a lot. We've essentially looked at a couple of pillars. The first being the infrastructure pillar. So you need to have the proper infrastructure, and to that effect, we've modernized systems, we've digitized essentially onboarding. Anyone can open a CDS account now and become an investor through a smart device. You don't need to really even see your broker. So the infrastructure aspect of it, we've invested heavily. We will be going into a CCP this year. That brings us up to sort of international benchmarks in terms of infrastructure capability. Then we've also looked at product diversification. So we've been a single product market for the longest time, maybe listed debt. If you count this year, 2 products that we had over the last 40 years of existence for the CSC.
But over the last 3 years, we brought in a lot of new products. So we brought in stock borrowing and in short selling so that investors can actually benefit out of a bear market as well. It's not just a bull market that you can make money off. We brought a lot of debt products to complement the listed debt space, and I think the SEC chair in his presentation or in his discussion sort of mentioned some of those. So in terms of the sustainable bonds, infrastructure bonds, social bonds coming, sukuks, all of these things we've sort of done. So the product diversification and derivatives we have planned coming in that offers investors various options to choose from. And the third and the most important pillar, which personally I'm not happy with the progress we made, but we've got somewhere, is really broad-basing the market, right? Both from an issuer perspective as well as an investor perspective. The reality that we have in Sri Lanka is today that we have 800,000 CDS accounts opened. That's a small segment of a bankable population in my view. We have 15 million plus potential investors. Then of that 800,000 number, we have 250,000 that actually have securities in them. So people who've invested, the rest are technically dormant, having no security in them. And out of that 250,000, you have less than a 50,000 number who we consider as active investors, doing one trade a month at a minimum. So I think there's a lot more to do on the diversification perspective, and I think we need to get that sort of sorted out, and hopefully with financial literacy programs, education, all of that sort of would change. On the governance front, we've had our fair share of problems. As you know, Navin, you've been a big part of this market for the longest time, just like me. A lot of people say, okay, this market is speculative in nature, right? It's a few individuals who play it. You can't really realistically look at fundamentals and make a bet on a share, because sometimes the speculative shares and sentiment drives them to different levels. But we've addressed those. We've addressed that, and I think with the SEC Act coming in a few years ago, the regulator now has the muscle to do what it, to really sort of take the wrongdoers and take action on them. We've also upped our surveillance from a CSE point of view. I think the SEC chair mentioned we are going in for a very sophisticated sort of surveillance system, both for the regulator as well as the exchange. And I think governance also relates to how investors behave. So I think you rap them on the knuckle a few times, which has been done. We've also seen CSE impose for the first time penalties on companies and as well as individual directors who don't comply to the rules, which I think now has set a stage that, look, this is a market that will be, rules do apply and you can't play around. I think those are probably the few things that we've done to sort of take the market to the next level, and there's more to be done, but we are working on it.
Ray, if I can go to you, again, putting on a hat as head of HNB Investment Bank, what are you seeing in the issuance pipeline? Is there a healthy pipeline for equities? I know there's a lot of debt issuances. We know that the central bank is putting this limit on single borrower tagged to the tier 1 capital of a bank as opposed to the total capital. Would that mean, I would expect that would mean that a lot of larger, well-rated corporates could start coming to the market? What are you seeing on that front?
Dr. Navin, if you look at the last 4 years, the market has raised about 416 billion, both in equity and debt, of which about 55% be in the form of debt. And last year we had a record year where we raised 175 billion, and of which 95 billion was in debt. So that sort of the equity to debt to equity ratio remains around about a 55% in favor of debt. And the previous record we had was in 2021, I think, when we raised about 123 billion. So we've seen a 50 billion increase from 21 to 2024. Currently we have 108 issuances in the market, That's about a 279 to 280 billion of debt in the market. And I see that in this year too, there are banks and both financial, non-financial institutions, corporates that are seeking to raise debt. The point you made is, or the question you asked is also pertinent in that with the SBL coming in, but that will be phased out, Dr. Naveen, so probably we'll see the full impact of it in maybe 2028. Where the banks would have a single borrow limit of 25%. So which will then necessitate, or in anticipation of that, it will necessitate for corporates to go out, especially the top corporates, who will be most affected by the single borrower limits coming in, to raise funds either in the form of debt, and that would be debentures or bonds, or if it's in equity, it would be in the form of rights issues, or in the form of private placements. So that's basically what we'll be looking at in the form of going forward in terms of corporates.
Thank you. I'd like to now talk about markets in particular and our outlook for the CSE for this year. Following on from the two excellent presentations done by James and Matthias, a question that I often get asked at Linear is, was last year's rally a classic pump and dump rally? And is the rally done? And my simple answer is that no, it wasn't a pump and dump rally. It was very much a fundamental driven rally. It was very much an earnings driven rally. And if you look at this year, our house view at Linear is that we are looking at, we track about 50 companies very actively where we have detailed financial models. And if I look at that universe, we have about a 30% earnings growth, right? So this is still very much a fundamentally equity driven year. So James, if I could again start with you, and if you can talk a little bit about your outlook for the Sri Lankan markets and, relative to some of the frontier players. And are there any particular sectors in this market that you like?
I'm not very good on 1 year forecasts, unfortunately, because we have to deal in 5 to 10 year forecasts really with some of the outlooks that we go for. I mean, I would just paint Singapore. You've got this fantastic political stability, you've got this fantastic macro backdrop, you've got this incredible population set and employment set. As I say, I lived in Singapore 25 years ago, and everyone laughed when I said, oh, maybe I should buy the house I'm living in. It was £1 million. It sold last month for £16 million. So I think you have to kind of think big. Sri Lanka has this incredible opportunity to be the next Singapore. Dubai is going to get full pretty quickly. Dubai is going to get expensive pretty quickly. And we've long talked about this amazing geographic location. You've got the big Indian population and economy sitting here. As much as Singapore played that role for Southeast Asia, Hong Kong obviously for China, Dubai now for the Africa and the Middle East, Miami in effect plays that role for South America. I know a lot of people who've moved their businesses to Tbilisi in Georgia. The world is incredibly mobile. The West is bust. Every government in the West is trying to raise tax, other than Mr. Trump because he just prints dollar bills. But the world is very mobile, and Singapore used to be a low-cost manufacturing location, a low-cost back office location for banks. I remember when Merrill Lynch moved 600 IT workers to Singapore because it was cheap. You're not doing that today. So on a 5-10 year view, I can see Singapore having this incredibly robust economy, manufacturing. As I say, I can imagine Apple making phones here. I can imagine Mr. Cook would be desperate to get some manufacturing space. So what do we look at? We look at the basic building blocks. I first met HDFC Bank in India. It was $1 billion market cap. It's $150 billion market cap today. I really probably shouldn't be sitting here. If I just held it for 20 years, I'd have made 150 times my money. It doesn't make any sense to me that the market cap to GDP of the banking system in Sri Lanka today sits at, we probably get to about $5 billion if we're lucky in total financial market cap. We're at about 5%. The biggest bank
commercial bank shouldn't be 70 basis points of GDP. Morocco, Attijara Wafa is 10% of GDP. It's a $10 billion market cap bank for a $100 billion economy. So we like the banks. The banks, we've talked a lot about the growth of financial inclusion. We've talked a lot about the growth of financial literacy and the financialization of an economy which gets driven by population growth. You know, the classic consumer stocks look very interesting. So I think, you know, the point is you deliver the earnings, the rating of the market improves, and to the point about liquidity comes through as you keep delivering. So, you know, unfortunately, we always just have to be very patient, which is why we have to have a 5 to 10 year view, because you never quite know when it's going to deliver, but everything's on track. So for us, it's the classic indicators. And again, we have to be relatively big cap. I mean, if we're trying to deploy $1 billion fund around the world, we want to have $10, $20 million positions. So unfortunately, we're kind of slightly stuck. Our universe is maybe 5 to 10 names. But I can't think of anything I wouldn't want to own in Sri Lanka at the moment.
Matthias, if I could put the same question to you. And also, if you look at Frontier Asia, you know, Vietnam is a large component of that. But Vietnam, if I remember right, has about 113 billion trade surplus with the US. It's probably number 2 on the list. Maybe in line for some Trump tariffs. Is that a positive for Sri Lanka as well? And how does Sri Lanka rank in terms of your ranking of the countries that you put in your presentation?
Well, I think in general, of course, if we discuss Trump, I think the most significant impact on all of us is, of course, the uncertainty that he creates around the world. And you can have theories around that, and our theory is that there is some sort of logic. There is actually some rational behind this action, meaning that he's negotiating. I think in these negotiations we've seen a couple of things. Of course, the main, if I may call it enemy in lack of a better word, is of course China, with kind of fighting for power. So what we've seen, primarily in the ASEAN countries, is that US is increasing its trade with ASEAN countries. China is also increasing its trade with ASEAN countries. I think, of course, those countries around there, they're much bigger than countries like Sri Lanka, Pakistan, Bangladesh, etc. But I do believe that regardless of how this plays out, I think there's kind of a positive spin for those that are not kind of directly into the conflict. You mentioned Vietnam, and now we're talking Sri Lanka, of course, but in Vietnam, I think that there will be negotiations with Vietnam, and you will see some weapon purchases or similar stories. I don't think Trump is out for the low-cost producers, really. He's out for U.S. power in the world. In terms of the equity market, what we have said for Sri Lanka is that and that's, I think, first of all, in context, to say that one of the best performing equity markets of all time is, of course, the Standard & Poor's 500, which has since end of 1927 returned 10% a year in US dollars. So I think we need to be reasonable what to expect kind of returns. I think if you get 10% compounding over time, that's fantastic. We do believe that most of the kind of revaluation of Sri Lanka is done. That was done after the crisis that started already in April 2022, and it went pretty quickly. What you can have from here, and I think that's actually a good thing, is that you can have, if you have a stable scenario, with kind of, you've done most of the raising of the taxes, that's already done, the banking sector is super taxed. You've done kind of the VAT increases, you've done kind of the heavy lifting. So what you can have from here is that the economy that's kind of gradually waking up, consumption is starting to pick up a bit, and you can have compounding growth of, say, 8 to 10% a year. Valuations are in a normal range. That means you can have your kind of stable compounding equity market, which is really what we hope for Sri Lanka. So that's so I think I'm not super bullish on a kind of a sudden rush, but we still maintain our weight, and we think it's a good addition to the portfolio.
Thank you. I'd like to take some questions from the audience now.
Navin, can I just add one more point on the short term? I think this may be less relevant to the foreign investor community that's here today. But in the local market, the other way to look at it is actually, if you really understand what your post-tax investment alternatives are now, right? Your fixed income rates, bank deposits, other kinds of deposits are giving you 7.5% to 8% on 1 year after tax. Most of you sitting here probably are in the 30 to 36% tax bracket. You're making 5%. We've developed a dividend portfolio just on dividend returns because dividends are taxed at 15%. You're making 7.5% to 8% in that portfolio. If you look at the ASPI targets that many of us have, which will reach probably 18,000 for the year, based on a whole bunch of fundamentals that we've I think already gone through, you're talking about a 17 to 20% tax return on the fact that listed equities has zero capital gains. So that distinction, I think, particularly for local investors, is pretty large right now. I think there's always an inflection point between risk and return that anyone needs to choose. But I think you've really got to think about these relative returns on a post-tax basis. And that's, I think, one of the other factors we've seen why the local market has actually rushed into the market over the last 6 months.
No, I think that's a valid point. And if you look out for the next couple of years as well, as I said earlier, as long as the government runs a primary surplus, you're going to have relatively stable interest rates. I don't think they'll go to the levels that we saw in the 11, 12 or 15, 16 cycle. So on an after-tax basis, you may still be getting single digits on your fixed income investments, and that is a very strong case for equities. Any questions from the audience? No. Dilshan, if I could just ask the same question from you, putting on your hat now as First Capital, what is your outlook for the equity markets? And you guys are also a very large bond house. What is your outlook for interest rates?
Yeah, so I share the sentiments expressed by Dumit and yourself in terms of equity markets. I believe it's undervalued. From an after-tax perspective, you're absolutely right. So I think it'll be predominantly driven by retail investors who will shift asset class from fixed income to equities. That will give. We share your view, maybe not as much as 30%. We think market earnings will grow by 22 or 24%, if I recall right, according to First Capital research. So based on that, then you're looking at your forward multiples being even cheaper. So that validates the case of getting in now. In terms of interest rates, we feel we'll have fairly stable interest rates till the end of the year. We are still in a deflationary environment, and I don't think there's any market still, even if you take fixed income, that gives you a real return of 5+. So that may somewhat delay the transition of local investors really moving from fixed income into the equity space. But we think interest rates, government securities being the benchmark, is now ballparkish around 9 and 10%. If you take a 5-year bond, it's probably around 10.3 as a benchmark. And we are looking at, even if private sector credit growth picks up, we are anticipating about a 12 to 14% growth in private sector credit growth for 2025, that there won't still be any change in policy, but there may be a drain in market liquidity. So market liquidity currently is about 170 billion rupees. However, vehicle imports, opening up the imports may drain some part of that. And if that falls, there can be a slight pressure on interest rates. But again, our forecast is a maximum of 1% movement in our forecasted range of rates. So if I take the 5-year benchmark bond, I think we forecasted it would fall to between 10 and 11. It is currently at 10 and 11. We are saying year end, it could go to 11 to 12. So anyway, it's negligible. I don't think it's going to change the case on equities. So while interest rates may very well increase towards the latter part of the year, it's not going to go crazy. I don't think the days of seeing 15% on GSEC, in my view, is gone.
Hopefully.
I'm also a bond trader, so not that I dislike volatility, but yeah, hopefully.
Any questions from the audience? I think there's one over there.
Yeah, good afternoon. We have a number of listed companies. We have been struggling to increase the number of listings over the last few years. I mean, we had about 240, 50 companies even 10, 15 years back, and we are still having about 280 plus companies listed. While we struggle to get large family-owned businesses to be listed on the stock exchange, even large sectors of the economy are not represented in the exchange. While we struggle to get companies listed, the regulations, especially the new corporate governance regulations, discourage family companies from coming to the market. So what is the view of the panel on this? Because this is, I think, a hindrance that discourage family companies to getting listed.
So can I put that to Ray and then maybe Domain?
Can I try to throw some a little bit more context to that and then try to answer your question? Your point is very pertinent. I think Ruvini, you mentioned in your presentation that 52% of GDP is from the SME sector, and I agree with you that the SME sector is largely has been largely, I wouldn't say ignored, but not being focused on by the investment banks and other institutions in bringing them into the market. We have, I think, 4 listed companies under the Empower board with a market capitalization of 1.8 billion rupees in an overall market capitalization, I think, of about 5.5 trillion. Now, for example, if you look at like countries in the region, in India, you have the Emerge board, which has over 500 companies from the SME sector. Malaysia has something called, I think, ACE, which has over 200, and similarly, Singapore also has the Catalyst board, which has over 200 companies that represent that sector. So there is a huge vacuum, a lacuna, and I fully agree with you that a lot more needs to be done to bring more companies that are in the SME sector into the market. Having said that, from an investment banker's perspective, I also must state that it's not easy. It's a process, it's a journey that sometimes takes 2 to 3 years to prepare a company to be ready to go to get listed, because there's lots of rules and regulations and governance and other factors that need to be these things. So they need to be ready in terms of they have to be prepared, and that preparation takes a little time. So I hope I have answered your questions sufficiently.
Yeah, I would add a couple of things to that. I think what Ray said is absolutely right. So I think we had to look at it in 2 perspectives. In terms of the overall market, you also need very large companies, right? That's what brings people like the gentleman on either side of me into this market. It's not the number of small companies or having a very large market cap built on small companies that makes a huge difference internationally speaking. But locally, what happens is, we have a few large companies. Unless there are deeper companies that come to market, I think the large investors generally tend to shy away from it, because each understanding and investing in a single company takes the same amount of effort, whether you're a very large company or a very small company. So there's also, I think, one big inflection point should or hopefully be the single borrow limits for the banks coming up faced over the next few years, because frankly, from a capital raising standpoint, large companies and some of the largest family businesses have had unlimited access to bank capital. And why is that? Because banks, from a savings standpoint, unnecessary amounts of savings are sitting as cheap funding for banks. Now here's the stat. The net interest income margin of banks is about 3.9% last quarter in Sri Lanka. If you look at the Asia Pacific markets, if you look at the deepest capital markets, there you have banks with net interest margins under 2%. So the developed markets like Korea, Japan, Australia. Then you have the markets like India, China, others where the capital markets are a little deeper, whose net interest margins for banks sit between 2 and 3. And then those like us, where the capital market is not so deep, you see the banks having NIMs of over 3%. Now, this is not to say anything against the banks, but the point is the concentration of capital coming from banks has restricted a lot of development and growth, and I think there's an exceptional role that the banks have played in driving the economy, but part of this is taking that weight, that burden off the banks, and then creating maybe larger banks. To James's point, we should be having some significantly larger banks to complement that. So I think the ability to fund some of these companies through listings without the bank and other credit support for them is one of the reasons some of the smaller companies have not come to market as well.
I think it's a fantastic question. It kind of sits at the heart of everything we do. Equity capital markets are there to provide equity capital for fast-growing companies. And I think, again, it looks very closely to the parallel I talked about for 97, 98 for Southeast Asia. Market cap's GDP wasn't huge out of the Philippines or Indonesia or Thailand. And as you begin to demand governance, transparency, all the questions we were talking about earlier, and as you begin to attract private capital, family capital into a market, if you're offered 5-6 times earnings, what's the point? If you're offered 15-16 times earnings, 25 times earnings, I mean, look at India. India had 2% of GDP on the offer last year. I couldn't go to sleep without getting 9 IPOs sent to me every day in India. It was, and that didn't happen 20 years ago. So it's a natural evolution. I think it's to be encouraged, whether you give tax breaks, whether you demand the transparency, or to get tax take to GDP higher, that obviously benefits. And companies might not want to list, but the transparency actually generates better companies in general, because you have to publish report and accounts and do your governance processes. So we thrive on IPOs. We thrive on the broadening of the stock markets. I did the China Mobile IPO. I did the Tencent IPO. I mean, China had no listed companies 30 years ago. It's now the second largest stock market in the world. So it should be a natural consequence, and it should happen as countries develop. And I think you'll see a very deep parallel with what happened Thailand, Indonesia, the Philippines, and what you've just seen happen in India. So I think it's a brilliant question. It's to be encouraged, but I think it's a natural consequence that if you're offered 15 times earnings, not as an exit, but as a crystallization of value, then you create a paper currency to be able to make transactions. So I think it's a great question, and I really hope we do get some fantastic ideas coming out of Sri Lanka over the next decade.
Thank you. I think we've come to the end of the panel discussion, so could I ask each of you to give some closing remarks, keep it to less than a minute, please. James, if I could start with you.
Well, I would just encourage everyone to have a long-term faith in Sri Lankan capital markets. I always love it when people laugh at me, and when I say that Sri Lanka was the best foreign market in the world, or one of, last year, and I think it can be for the next 10 years, people laugh at me. So that's always a good sign that we're probably on the right track.
I agree 100% with what James said. I think to get there, I think there's quite a bit of liberalization that needs to happen within markets. I can give you examples. When I was chair of the stock exchange, proposals we brought to do overseas currency listings for Sri Lankan companies who wanted to be multinationals internationally hasn't moved very far. We talked about gold as an alternative asset class. We put proposals on developing gold-backed indices or securities. Again, another great option for us to, for individuals, investors to grow their wealth, because I always think prosperity is not just about higher income, it's also higher wealth generation, which means we need to give people better options to invest and grow their money. So I think there are some tweaks, liberalizations we need which if we do that, I have no doubt that we could be sending you 9 IPOs a night.
I think if we look back at Sri Lanka, and you should recall also that back in 2013, 14, 15, we were still kind of positive on the long-term outlook. We should also, and then of course a lot of blame was put on the previous administration, before the previous administration, and I think that's correct. We've been one of the kind of hardest accusers of what was done. But we must also recognize that Sri Lanka was very unlucky. I think the disasters that happened first 2019 and 2020 to I think into 2022, those are kind of extreme events that I think should have a likelihood of non-significant. So I think where we are now is basically we're back at a new starting point. You still have the same advantages. It's just that you cleaned out a lot of imbalances in the system. Foreign investors were afraid of the new administration. We mentioned that as one of the kind of highest risks 1 year before elections, that we don't really know what they're going to do. What we have now is kind of a stable political setup, but we also have a market that was kind of, I think, is bound to kind of compound upwards unless you make drastic mistakes. It's not the new India, it's not the new Pakistan, it's not the new Bangladesh, it's Sri Lanka. So it's its own story, but I think it's going to be a good story for the next decade.
Few insights, Dr. Naveen. Two which are more policy driven, which I would really like to see happening. One is the pension reforms, and we spoke of that. I think it's time that people, employees are given the option of putting a percentage of their monies into equities. The younger generation are much more discerning than our generation and generations before. So they need to be given that option. And I think that's something that is imperative. The other is we would really like to see a listing or a few listings of, at least with the banks, state banks, of SOEs. And you don't need to, I think Chairman SEC used the word equitization. I mean, that's fine. But in whatever form you call it, I think we really need to, and I think Chairman SEC, this is something that we really need to push. There's a 5 to 10% of a listing of a state entity will create so much more in terms of market capitalization and a lot more impetus to the offering that we can make to foreign investors. That's one. On the regulatory and the side that we could do, I think the participants need to know that under the new chairman's leadership, we've revived the 10 or 12 initiatives to see how we could fast track some of the things that we need to. As I think Dilshan mentioned, the Chairman SEC before, we're still a one equity, a vanilla equity market. I think derivatives have to come. We're having a CCP that's about to be completed. That will pave the way for derivatives. Market making, Dilshan, for the debt market, I think is something that we can do quickly, a low-hanging fruit. And the other would be the bonds. We spoke of infrastructure, we spoke of ESG, we just had one green bond, and Sukuk. So some of these things that I would really like to see over the next 12 months. And if we do gather here sometime early next year, that we would like to see that there has been some positives that we can take from events and forums such as this, Dr. Naveen. Thank you.
Yeah, thanks. So I'm going to first thank the News First who I think covering this event, because they've just released a publication saying state-owned enterprises to go public, proposal by the central bank chief. So Ray, I think the media has read that, and I also had that as a comment. I think there's a misconception that listing state-owned enterprises is privatization. It's not, and I think what we are saying is, look, there is low-hanging fruit. For example, if you take the two state banks, like you said, Ray, and you list them, you divest at 10%, you're not losing control, but you can possibly increase market cap by 15 to 20% from where it is. So I think that is something that we really need to pursue. The rest, I think, is a really appeal both to domestic investors as well as the international investor community to believe in Sri Lanka's story. I think I've seen many instances before where we've come. 2009-10 was one instance. End of the war, we had a lot of hope, Navin. Then again, I think possibly 2015-16, we said, okay, new government will. But I mean, we've messed it up ourselves. I don't think there's anyone else to blame. But right now, I think people, the Sri Lankans understand that we can't really deviate from the path we are. And I think we are at a pivotal point where Sri Lankans are holding politicians accountable. I've not seen that happen in the past. That's the biggest thing for me. So I think if the public play their role, we've had 5 governments over the last 10 years, changes in power. I think we are the best example for a vibrant democracy in the world, right? There is no one else who's changed governments like we have, had revolutions, no bloodshed or very little bloodshed. I think that speaks volumes of the people of this country, right? And that's the message that we need to take across. And that's the message I think then all of us as Sri Lankans and also our foreign investors should believe in and invest in the market, invest in Sri Lanka, put your savings. And I mean, a lot of people say you have a conflict of interest, but I don't see a conflict. I invest in the Colombo Stock Exchange. I invest in the market. I put my money where my mouth is. I think if we all do that, this country can really elevate itself and have a much better, prosperous future. Thank you.
Did you just start a juice business? Did you just start a juice business?
Yeah.
I think we can all, I think the conclusion that we have arrived at is that if Sri Lanka continues on its current path, if the new government continues with the reforms that have been done, particularly the key reforms on the economic front, I think we can all agree that we could be in for a period of relative stability on the macro front, relative stability on interest rates, relative stability on the exchange rate, and that could mean it's a very positive outlook for the equity markets in particular. So we could be looking at a scenario where we have a positive equity market, not just in 1 year, but hopefully in a 2 to 3 year cycle as well. Thank you very much.
Ladies and gentlemen, can we give a bigger round of applause to our panelists? The panel discussion focusing on leveraging economic growth for a robust capital market. I request the panelists and the moderator to remain on stage, as I would like to invite Chairman, Securities and Exchange Commission of Sri Lanka, Senior Professor Disa Bandar, to join us on stage to present our panelists and the moderator with tokens of appreciation. Let's have a good round of applause, ladies and gentlemen. Thank you very much to Mr. Dilshan Veerasekara, Chairman, Colombo Stock Exchange, Mr. Matthias Martinson, Founding Partner, Chief Investment Officer, Tundra Fonda AB, Mr. James Johnston, Co-Head of the Red Wheel Emerging and Frontier Markets Team, Mr. Ray Abhiwardana, Managing Director, Group CEO, HMB Investment Bank Private Limited, and Mr. Dumit Fernando, Chairman, Asia Securities Holdings Private Limited. And let's give another round of applause to our moderator, Dr. Naveen Gunawardana, Managing Director and Co-Founder of Linear Wealth Management. Thank you very much for your contributions. Thank you very much, dignitaries. All right, ladies and gentlemen, how are you doing? All right, may I request all of you to rise for a minute? All right, I think you badly wanted that. Yes, I can see that from your faces. Why don't we stretch a little and warm our hands a little? Rub your palms against each other and get yourselves a little warm. All right, and can we give a huge round of applause to a successful Invest Sri Lanka Capital Market Investor Forum 2025. We have one more panel discussion to go, so please take your seats. Thank you very much. Ladies and gentlemen, we are honored to have a distinguished group of exchangers with us today. The Stock Exchange of Pakistan, the Dhaka Stock Exchange, the Nepal Stock Exchange, and the Stock Exchange of Maldives have joined us today. The Pakistan Stock Exchange and the Dhaka Stock Exchange and also the Colombo Stock Exchange signed a memorandum of understanding this morning to collaborate and work together towards building a stronger South Asian initiative, marking another step towards fostering regional collaboration. This agreement represents the exchange's commitment to strengthening ties and enhancing cooperation in the capital markets. With that, we are now ready to proceed with the formal exchange of the MOUs. May I kindly invite the following individuals on stage for this important moment. I would like to cordially invite Mr. Mominul Islam, Chairman of the Dhaka Stock Exchange, Mr. Badiuddin Akbar, Chief Executive Officer, Central Depository Company of Pakistan Limited, Mr. Rajiv Bandar Naikar, CEO of the Colombo Stock Exchange, to join us on stage. Let's have a good round of applause, ladies and gentlemen. And also we are honored to welcome on stage Mr. Akif Said, Chairman of the Securities and Exchange Commission of Pakistan, Senior Professor Harindra Disa Bandara, Chairman of the Securities and Exchange Commission of Sri Lanka, and Mr. Dilshan Veerasekara, Chairman of the Colombo Stock Exchange, to witness this exchange of MOUs. The Pakistan Stock Exchange, the Dhaka Stock Exchange, and the Colombo Stock Exchange signed a memorandum of understanding this morning to collaborate and work together towards building a stronger South Asian initiative, marking another step towards fostering regional collaboration. And this is the official exchange of MOUs. Ladies and gentlemen, please put your hands together. Let's have another big round of applause, ladies and gentlemen, to the exchange of MOUs. Thank you very much, and we wish you all the very best. I request Mr. Mominul Islam, Mr. Badiuddin Akbar, Mr. Akif Said, Mr. Dilshan Veerasekara, and Mr. Rajiv Bandar Naikar to please remain on stage, and I thank the rest of the dignitaries. And we're now ready to move into the next panel discussion. And to join the panelists on stage, I would also like to cordially invite Mr. Aushan Latif, CEO of the Maldives Stock Exchange, and Mr. Chintaka Mendes, Director General of the Securities and Exchange Commission of Sri Lanka. Ladies and gentlemen, please put your hands together to all the panelists. And this panel discussion will be moderated by Mr. Rajiv Bandar Naikar, CEO of the Colombo Stock Exchange. This discussion is on navigating frontier capital markets, how evolving market regulations and exchanges foster efficient capital development. Mr. Rajiv Bandar Naikar, over to you.
Thank you and welcome to the third and final panel, and also I think the largest panel over here. We are acutely aware of the time, and we'll try to balance hearing the needs, your gastronomical needs versus hearing from several market institutions that are represented on stage today. As we heard earlier, the minister alluded to capital formation, and I think in the last panel too, an interesting question came up about capital formation. So when we look around our three or four markets that are represented in South Asia, I think these markets are characterized by relatively lower levels of liquidity, higher volatility, and in terms of size compared to other Asian markets, relatively smaller, although Pakistan and Bangladesh is fairly larger than Sri Lanka. So if we discuss this aspect of capital formation, and what I'd like to do is to pose this discussion point as to how improving market regulation and improving market infrastructure can foster efficient capital formation within these exchanges. We heard from the market players, the investment banks in the last panel, but we'd like to hear from the exchanges to their perspective as to how they see it, as well as the regulators who are represented here. So can I start with you, the chairman of the SEC of Pakistan, Mr. Saeed, to comment initially on this aspect.
Okay, I'll quickly say a few words about Securities and Exchange Commission of Pakistan. We are a integrated financial sector regulator minus the banks. So we are in a privileged position, but not only the capital market, we look after the non-banking financial companies as well, and the pension and the insurance. And on top of that, we are the corporate registry as well. So that's a quick background in terms of SECP. Insurance has been talked about, and one of my colleagues asked the question in terms of whether the insurance on the institutional investors, how active they are and how. So we have, last 2 years, we've developed an insurance plan. We have a low penetration. We have developed a 5-year strategic plan. It is basically the policy initiatives, the legal amendments, and then, of course, the operational side of it. The focus is on the theme which run across all the sectors is the digitalization. As far as insurance, we have the three large insurance companies in the public sector. The government has taken a strategic decision, and all three are to be privatized. It could be a combination of listing first and later on bringing in the strategic investors. So that's something which, and one of them is already listed, but the government wants to sell all their shares through the capital market. So that's the insurance flavor in terms of where we are heading. It's basically privatization, market-based competition for the insurance, and the growth through the digitalization of the processes, developing of the repositories. Second is the pensions. Historically, the pension has been defined benefit in the civil service side, which is the largest. But the provincial government as well as the federal government has taken a decision to shift from defined benefit to defined contribution. One province has already started from 23. Federal government has started 1st January last year. And the largest province, which is Punjab, is also looking at, they have the rules and the framework in place. So soon they will be, and these funds will be managed by the private sector pension funds on behalf of the employees as a contributory, both by the government and the employee. I think that's a new fund flow which will come into the capital market. Initially, they will be focusing on the fixed income side, but gradually there will be some exposure for the equity side. When it comes to the capital formation itself, the topic of this panel, I personally believe that's the rationale or the justification for the capital market in itself. So ultimate barometer is what is the capital formation taking place at a capital market. For that, as at SECP, we have last 24 months or so, we have taken few decisions. First is the promise to the market in terms of the IPO process approval itself. So we have set a timeline along with the Pakistan Stock Exchange. So it is the approval of a prospectus. Once it is submitted jointly both at the exchange and the regulator. And within 14 working days, that's the promise we have made, and we have kept that promise for the last 2 years. 10 or 12 IPOs, so it's 14 working days approval and 29 working days from submission of the application, the trading starts. And we want to restrict or shorten this period further there are certain legal amendments which need to be done. Once it is done, it will be much more efficient than the 29 days. Second development which has happened in the fixed income side is the government took a decision in December 23. So now the government debt, particularly the Islamic, the Sukuk, all the government Sukuk are issued through auction at Pakistan Stock Exchange. They started in 23. In last 15 months or so, roughly about $8 billion equivalent Sukuks have been auctioned at Pakistan Stock Exchange. It brings in efficiency in terms of time and cost. It brings in taxation, efficiency in terms of taxation. And last, and brings in the most critical part is the confidentiality, because the conventional system was the primary market dealers. So now it's everybody at the same par as far as the bid price or the price discovery is concerned. We had certain issues in the secondary market, but we have sorted out by sitting with the banks. Last 2 months, the trading volumes have picked up. It's roughly about more than $200 million every month. And as we progress, I believe this will increase. I think in terms of attracting the investors, we have a digital portal. I think Badiuddin Akbar will talk about. It's done by CDC. But what we are now looking at is interacting with issuers. So as a regulator, along with Pakistan Stock Exchange, we started holding countrywide IPO seminars. Idea is to go out and reach out to the companies which are unlisted but meet the listing criteria, and to interact with the sponsors on one side and the sponsors of the recently listed companies on the other side, and do such roundtables so they can talk to each other, why they got listed, what's the benefit, what's the problem they have faced. I believe apart from capital, there are other aspects also which needs to be highlighted, better to be done by the sponsors rather than by the regulator or the exchange. So I think quickly, this is what the capital formation we are working on. The theme is digitalization. I think my counterpart from SEC Sri Lanka highlighted 2 parts. One is the demutualization, another was the digitalization. Digitalization we are working on, and then this is a process. As we move along, the new technologies, the digital assets will pose challenge for the frontier markets and the markets overall. Demutualization, we have gone through that process, but my 2 cents would be demutualization is a mean, it's not an end. Ultimate test would be the governance and the confidence investors have in the market.
Thank you, Mr. Head. We'll come back to demutualization again if we do have time. It's an interesting topic of conversation, particularly in Sri Lanka. So we have another regulator on board, the Sri Lanka SEC, Mr. Chintaka Mendis. Can we have a brief comment from you as well?
Well, to begin with, Rajiva, I know for a fact that CSC spent a lot of time and energy to put up this event. I mean, when you look at the magnitude of the gathering and when you look at the cross-section of the market that is represented over here, I would say it is a testament for the confidence and the faith and the trust people have put on our capital markets. When it comes to capital markets, it is basically to channel private funds to finance key strategic projects that is coming out from corporates as well as other sectors, beginning from infrastructure to healthcare or whatever you name it. At the same time, capital market can be utilized to raise funds to address concerns that is arising from climate change and other concerns as well. Secondly, I would like to argue the case for an economic growth that is based on capital market development. As you would know very well, there's a strong correlation between capital market and economic growth. When you look at the other markets, other emerging markets, rather frontier markets we talk about, most of the countries have done very well where capital market has played a pivotal role or an influential role. When you look at the capital market that we regulate in Sri Lanka, I mean, before this panel, I listened to how Dilshan brought out the fact that we have a well-regulated market. Certainly that is the case. I do agree with everyone who would say that we have a market that has everything which can be compared with all other comparable jurisdictions. Our regulatory and legal framework is par with all other emerging markets or that can be compared with advanced markets, if I may advance that point by saying that. So what is required is now making use of this framework to raise funds for capital formation to finance all other sectors that can drive the economic growth. For that matter, previously also we have experienced similar situations, but we failed to sustain that promise and the growth that everyone expected to bring in through the market. But the question now is, after so many years grappling around, what is the situation now? Can this situation be sustained for a while? I am glad that our friend from Tundra, Matthias and James, stated this is the safest haven for the next 10 years. Matthias went in to say that he can bring his family down here even. That is the faith and the trust and the confidence people who have associated with our capital market brings to this forum. I need not further harp on the point that everyone made from the beginning of this day, that we have seen economic stabilization. For that matter, our economy has fared very well beyond everyone's expectations. I would say that is to stay for the next 10 years. So, whilst congratulating CSC for putting up this show, I would like to say, keep faith on our markets. That is required for you all to bring your money and to invest in this market. For that matter, you have a legal and regulatory framework that you can keep the faith on. I would like to end my opening remarks by saying this line. We have taken very ambitious road over the last several months with the initiation of 12 key capital market transformative projects with a view to take the market to the next level. So come next year, you will see a different market. We have taken steps to establish multi-asset class derivative exchange which could trade financial derivatives as well as derivatives that is arising from commodities. If we could do all that in the coming years, Rajiv, I am sure this market will grow and we can establish the fact that finally capital market has delivered to its true potential.
Thank you, Chintaka, for that vote of confidence. Can I turn to Mr. Islam now, the chairman of the Dhaka Stock Exchange, your perspective on this subject of capital formation?
Thank you, Rajiva, and good afternoon to our friends from Sri Lanka, South Asia, and across the globe. So if you look at the South Asian market bar from India, so our combined GDP is near to $1 trillion, and the market cap of our stock exchanges will be around $150 billion, which is in any global standard for emerging market is quite low. And in case we want to ensure our economic aspiration in each of the country and in the region is achieved, we need better capital formation, and a stronger capital market remains essential. One important component is, of course, the political will, but on the other hand, the institutional capacity building, most importantly in current age through digitization, that will remain a critical factor. Our efficiency, our transparency, stability will largely depend on how we can integrate the market intermediaries in a more robust digital platform, so that both the supply side and demand side remains much more interested to come to the capital market. There definitely we need better collaboration amongst the stock exchanges and regulators in the frontier markets like South Asia, apart from India. So that is where I see a lot of opportunities on investment on the technology for a small market like Bangladesh, Pakistan, Sri Lanka, or Nepal per se. It will be difficult, but we can always collaborate both on the technology front and operational front. Another important factor is how we ensure better governance and better autonomy of the stock exchanges and liberalization of the policy parameters. So there also we have seen very different experience and very different trajectory in different countries within this region, and we have a lot to learn from each other. Certain things have worked very well in a certain country but have failed in another country. So we need to understand what are the key attributes towards success or failure in each of the country, and we can really then learn from each other's experience. If I come to Bangladesh, Bangladesh remained an enigma not only for our investors from global side, but even within the Bangladesh market domestically. We always got perplexed about the way the economy moved ahead despite all those obstacles. We had a disruptive political ecosystem, we had serious governance issues, but despite that, the real economy has progressed quite strongly, and we have also seen the key character of Bangladesh economy remains the resilience. There was apprehension that after the fall of the past regime, who were in power for almost 16 years, the economy may face serious catastrophic consequences. But fortunately, the economy is still holding, although it has lost its pace of growth, by around 2%, but still the 2024 forecast, approximate GDP growth had been around 5% plus, and for 2025 also there is above 5%. Inflation remains still an issue, but in February we have first, after 22 months, have seen the sign of declining trend, and the government has set a target to bring it down below 8% by June this year. So, which is, I think, challenging, but now realistic. The toll, the maximum toll, the governance or politicization of institution, the sector which has suffered most is the financial sector. So, Bangladesh market is largely dominated by the banks. The capital market is still small. Both the banking sector and capital market got crippled by this governance issue and politicization of the regulatory bodies. So what is more important now, after the caretaker government has been formed, led by the Nobel laureate Dr. Muhammad Yunus, we see the real will to really reform, the foundational reform in the financial sector, both in banking sector and in capital market. So lots of works currently going on, and we are hopeful through this transition period, lots of reform, the foundation for reform work will be laid out, and once the election schedule is announced, we'll see better confidence from the investors, from domestic market and from the global audience as well. But it will be a challenging task for Bangladesh financial sector as a whole to really come out of the tent that has been caused by the lack of governance and politicization over the decades. So, but as the real economy remains strong, the fundamental parameters of the Bangladesh economy remains strong. If you look at the top 5 manufacturing companies in Dhaka Stock Exchange, their bottom line has doubled in all of them, doubled in last 5 years. So we are very hopeful that the real economy will support the financial sector to really repair the dent which has paralyzed the sector. And in case these reforms can be successfully completed, we can expect a very strong turnaround in the capital market in Bangladesh. Thank you.
Thank you, Mr. Islam, for those very thought-provoking ideas that you do put forward. And I'm sure buoyancy will return to the Dhaka market and the collaboration that you spoke about. I think 3 exchanges, we are meeting tomorrow, and I will hope to take our MOU forward so that we can come up with, learn from each other, and this particularly the aspect of capital formation, how to crack that nut, as it were. Yeah. Let me turn to our neighbors and good friends in the Maldives. And can I turn to Aushan, the CEO of the Maldives Stock Exchange, to give a comment on our topic?
Thank you, Mr. Rajiva. Bismillahirrahmanirrahim, Assalamu alaikum, and a very good afternoon to everyone. Before I dive into the topic of discussion, I'd like to briefly introduce the Maldives Stock Exchange, because I don't think any of our statistics was covered during any presentation today. So just to set a bit of context, I'll give you a little brief on the Maldives Stock Exchange. Maldives as a country in itself is also quite unique. As you know, we are very, very small. I always like to say this, if you go to the Google Maps to find us, you have to really zoom in to find the little string of islands, which we call home. And the Maldives has a population of roughly 500,000 people, which is quite less, and in itself actually poses a lot of challenges for us, for our local businesses which try to scale up to a point where they actually can seek a listing on the exchange. Or on the one thing that we are very famous for is obviously the tourism. Yes, we are blessed with a booming tourism sector. However, it has been somehow, interestingly, a bit difficult for us to integrate the tourism sector with the capital market. There's no single resort, no guest house which is listed on the exchange. It is still a work in progress for us. And on the macroeconomic front, as you all may know, the Maldives is also facing a lot of debt pressures. On the positive news, the good news is that the most recent fiscal reports show improving, encouraging trends. And we also do commend the Sri Lanka's own economic recovery efforts, which is quite remarkable, while we are actually battling our own. So obviously these factors influence the entire economy as well as the operations of the exchange. And if we look at the exchange separately, we are quite young, just 17 years. I call our team teenagers because in comparison to our peers, just yesterday I learned that CSE is 40 years old, and I believe the Pakistan exchange is 80 years old. So there's a lot, obviously, for us as a small exchange to learn from the neighboring countries' exchanges. Yeah. If we look at listings, we currently have just 9 equity listings with a market cap just over $2 billion US. That is roughly about 30% of our GDP. So you can imagine, even if we have very limited equity listings in the country, they actually represent very big companies overall in the nation. And we currently have just 3 licensed brokers, dealers that are actively facilitating trading in the market, and just a handful of institutional investors, with the pension fund being the biggest investor. So if we flip this perspective, what we see at the exchange is all opportunities around all corners. That is because every aspect of the capital market can be expanded, be it listings, be it liquidity, participation, or innovation. And that's where regulatory changes needs to come into play, and where exchange-driven strategies also need to come into play. So getting back onto the topic, I took a little bit of a side turn just to give you a little brief on the market. Regarding capital formation, I'll touch on just 3 points, which is digitization, regulatory changes we have done so far, and also governance aspects. So like most exchanges, we are also heavily investing in technology to improve accessibility and all of those. But we are doing it very quietly, building our own fintech infrastructure. And we are proud to say that 1/3 of our assets is now technology. But frankly speaking, we are still working out our basics, which are trading systems, settlement systems, and depository systems. And in January 2025, early this year, we were able to launch our first online trading system, which has definitely managed to increase the trading volume and traffic in the market. And we didn't do this in isolation. We learned a lot from our peers, and today when all the MOUs are being signed and all the discussions are happening between the exchanges, we are a practical example of a beneficiary of all of these peer-to-peer knowledge sharing between the exchanges. So when we were doing our trading platform, we learned a lot from the Royal Securities Exchange of Bhutan, who you would remember launched their own MCAMs in 2019. So their experience and help gave us a clear roadmap. And on the depository system side, we are working very closely with the Pakistan CDC, who we treat them as subject matter experts because their documentation is super perfect. So they're actually helping us develop our own depository systems. So that is one angle we are working for capital formation, getting our technology at least by par with the rest of the world, just to kick off the core businesses of the exchange and depository. In terms of regulatory updates and market structure enhancements, we also revamped our entire listing rules. We used to have a very short document, I must say, but then we revamped the entire document, which is now benchmarked with the more developed exchanges such as Hong Kong and the Singapore exchange. The goal was to bring more clarity, improve the gaps, make the listing process a lot more smoother. And one of the standout additions that we brought to the listing rules was to add another market segment. So we already do have the main board of the exchange, but we brought in a private board, which we are calling a Vienna board of the exchange, where private companies remaining private can actually list debt instruments and raise capital through the market, through investors. So this was a very novel concept for us, and the entire Vienna market is operated through a digital platform, which we launched in 2022. And by far, there are 7 debt listings through the Vienna platform, which is both conventional bond and sukuk. And there are a few in the pipeline as well. So remember when I said earlier that we just have 9 equity listings, and this particular one single change has brought us 7, not equity, but debt listings. That's a real huge improvement for us. And I have to say, the people in Maldives, the local businesses, are much more open to the idea of capital raising beyond the traditional finance, because all these family-owned businesses, they would rather do fundraising through debt rather equity. On the governance angles, there were some discussions today about ESG principles and ESG-backed bonds. So ESG reporting is becoming mandatory back home for all listed companies starting from 2027. And I understand Singapore, Malay, and India as countries are also pushing in this direction. And it becomes very important for us as well, because we do seek to attract capital from foreign institutions that are prioritizing responsible investments. And currently we at the exchange have an engagement with the UNDP to do a due diligence, to understand and do a research on what types of SDG-backed instruments are working elsewhere, what's tried and tested, so that we can try and replicate some form of those structures back at home. So a blue bond or a sustainably linked bond could be quite a good fit for the Maldives given our environment and tourism-driven economy. And this is something that the Ministry of Finance is also looking at, and hopefully something we would see quite closely in time soon. So just to wrap up, we are trying to adopt best digitization and best governance practices as an exchange, but all in all, for capital formation specific to Maldives, I would say we really require a high-level political buy-in for the market to improve. Thank you.
Thank you, Oshal. And Maldives and Sri Lanka signed a very interesting MOU for dual-listed securities. Let's hope we can take that forward now. We also have Mr. Akbar representing the CDF of Pakistan. He's the CEO of the CDF in Pakistan. We'd like to hear from you as well.
Thank you very much. You know, okay, exactly, because I'm representing the CDC and also representing the PSX as well, the Pakistan Stock Exchange. The first and foremost requirement, the stock exchange is a forefront for any capital formation, because they are at the execution side. So they have to provide the robust system, they have to provide the procedure and processes very easy to attract the business owner. As someone asked in the last panel discussion, because the family businesses are not attracted to come to the stock exchange to raise the funds to the capital market. The reason is that the process and procedures are not so conducive and not so easy, and they are cumbersome, so they don't feel encouraged to join the stock exchange. With this objective, over the last few years, the Pakistan Stock Exchange has taken a number of measures to improve the system. First of all, as Mr. Akif Saeed said, they have significantly reduced the number of days for the IP processing, so that it is from 29 days, 14 days, and continuously working with the regulator to further reduce the processing time, and yet without compromising the financial information and the projection shared by the businesses, so that the investor confidence should not be shattered. With this objective, the PSX has recently introduced the electronic book building process, which is a complete end-to-end process to determine the final strike price before it goes to the public. And then they have also introduced the EIPO process as well for the investors as well. And also they have recently published the step-by-step the guidebook for the IPOs, so that those who want to raise their capital from the stock exchange, they can read the guidebook and then act accordingly. So these are the steps they have taken recently. And also over the past few years, the stock exchange has continuously engaged with all the business owners, Chamber of Commerce, and other business communities to encourage them, to convince them that that is the safest and that is the most effective way to raise the capital from the stock exchange. They are continuously engaged with all the stakeholders. And recently they have conducted and organized an IPO Summit 2024 as well. So, apart from that, in order to attract the small and medium enterprises, they also introduced a separate GEM board with the Growth Enterprise Market GEM board to attract the small and medium enterprises so that they can also come to the stock exchange with a very unique board, so that apart from the large business owners, the small and medium business owners can also participate in the capital formation as well. As in the Pakistan, the capital market is a complete ecosystem which comprises of the stock exchange, the depository system, and the clearing system. And all these three companies are playing their role to provide a conducive environment for the capital formation. And after the IPO, it is the responsibility of stock exchange to provide a robust trading system for the general investor, so that the secondary market is the most important to encourage the IPOs to come. So for that purposes, PSX has recently procured one of the fastest trading system in the world from the China, the Shenzhen Stock Exchange, which provide a complete range of products and services. So they are working on certain products and services related to for the secondary market as well. And with this, from the part of the depository system, depository is also providing a certain support to the stock exchanges we are also providing the EIPO services to the capital market. And in the last IPOs, about more than 70% application are being processed through the CDC IPO processes. And for the secondary market, as Akif Saab said, we are focusing on the digital transformation as well. We are providing a complete end-to-end solution for the capital market investors to open their account directly with the CDC, directly account with the stock exchange, directly account with the CDC. So we have recently introduced a centralized portal for the account opening process as well. So the Pakistan Stock Exchange is continuously engaged with the SECP, with the stakeholders, with the issues of the companies to attract more and more companies to join the stock exchange. Although we have now around 523 companies as listed company, which is as per the population, as per the size of the market, is very low. So our focus is that we have to attract more business owners to come to the stock market and raise their fund through the stock exchange. So these are the steps that recently taken by the Pakistan Stock Exchange.
Thank you for that. I see a lot of similarities between the three exchanges in terms of particularly encouraging new issuances. So it's good to know all this. And Dilshan, I know we heard a lot from you today, but have you anything more to add to the conversation?
Not so much. I think just to state that we have a lot of similarities with each of our exchanges. We are frontier markets. Each of us also have our own sort of set of challenges, but I think a collaborative effort to work together, to share knowledge, share resources, will take the markets collectively far more ahead than sort of trying to do it single-handedly. So I greatly value this initial step in terms of signing a MOU and trying to revive the South Asian Federation of Exchanges. And I hope that in the coming years, Rajiva, you and your team can actually take it to the next level. So I'll just end there.
Thank you for that. And if I may just digress, had an interesting comment about demutualization. And if I can indulge you in a couple of more minutes into this session, Sri Lanka has been very keen about demutualization, and I think the regulator is now taking some meaningful steps to get there. Both Pakistan and Dhaka have demutualized. We don't want to make any mistakes. We want to get it right. Mrs. Islam, can you give us a few tips on your process and particularly the outcome.
Excellent. I think in Dhaka we saw that demutualization took place back in 2013 with lots of excitement, enthusiasm and expectation. So it was perceived that with the demutualization, better transparency and efficiency will come in the capital market, both in the stock exchange and also in the intermediary management ecosystem. Unfortunately for Bangladesh, the demutualization did not bring in the desired outcome. Initially, what had happened, the kind of clear objectives, milestone and accountability that remained absent. And there was also absence of regular exchange amongst the stakeholders about the progress as well as review of what's going on well and what is not. Secondly, what we saw that the kind of responsibilities a demutualized stock exchange is supposed to play. They are the say frontline actor in the market operation and governance. So the kind of capacity that was supposed to be built within the stock exchange for that kind of listing activities or surveillance and monitoring activities, the stock exchange failed to do that. And in lots of cases, the kind of independence that was supposed to be allowed by the regulator, that was not also done in a way it should have been. There is still lots of duplication of work between the stock exchange and with the Securities and Exchange Commission that we are working on. And one key factor when you want to demutualize, essentially it is you're segregating the ownership and the management, and the independent directors play a very critical role there. Their appointment and their say incentive, that is also important. Unfortunately for Bangladesh, we saw many external influence took precedence over the qualification or the right mindset of the independent directors. So the kind of independent directors that joined the stock exchange, probably they did not have the time or intent or the capacity to contribute effectively in building the management capacity within the stock exchange. So far I have heard from my colleagues who are the shareholder directors in the Dhaka Stock Exchange. Fortunately, after the interim government has taken over, the commission has been reconstituted at the Bangladesh Securities and Exchange Commission. The board of Dhaka and Chittagong Stock Exchange that has been also reconstituted. We are now having lots of expectation from us. I hear from my colleagues in the board that they have never seen this kind of independent directors before, but probably we'll need to wait a couple of years more to see whether we can really justify the high expectation the market is having from us. I see the small experience I have with Colombo Stock Exchange and the financial sector in Sri Lanka. In terms of institutional capacity, both within the regulatory body and the stock exchange, I feel you are well ahead in comparison to Bangladesh. So only thing, if you can ensure setting up proper objectives, milestones with accountability and timeline, and regular a review of that with all the stakeholders sitting together and can calibrate in case something needs more attention. I think there is no reason that demutualization should not be successful here.
Thank you for those kind words, and I'm sure we'll have a lot to learn from you. Mr. Said, can I also have a quick comment about how Pakistan has done post-demutualization?
We started with 3 stock exchanges, and I think over a period of almost 18 to 24 months, we did 2 or 3 things, one after the other. First was the integration, then the divestment, and then the listing. So first, my 2 cents would be to sequence them as per the Sri Lanka's ground realities, and take your time. Don't rush things, one step at a time. Let the things shape up. Learn from the experience. If I look at the Indian stock market, listing came much later compared to, it should not be rushed, number one. But there are 3 things which, 3 areas which I think the securities regulator, it's not the job of the securities regulator alone. I think that's the first point would be that it's the overall market ecosystem which has to have a buy-in into that. One is the ownership structure, what you're looking at. Are you looking at divestment? Are you looking at the local investors? Will it be individuals? Will it be institutional investors? So I think that one has to be very mindful of it. If you have ownership of strategic, long-term financial institutions, particularly the banks, the local banks or insurance companies, then they will have a good second point is the governance, the board itself. What is the quality of the board? Whether it be independent, you can have 100% independent directors, but at the same time you can have advisory board, recommendatory board of a wider stakeholder who actually have a stake in the market. These are the 2 options. And third is the operations. As a commercial, once it is demutualized, when it becomes a commercial, how will you balance between the commercial and the regulatory aspect of it? Will it be housed within the exchange? Will it be outside the exchange? These are the questions. Of course, answer lies within the Sri Lankan capital market ecosystem. But you can look at other jurisdictions, learn and engage. But 2 cents would be ownership, governance, operations. That's one part. But the second is the timeline. You need to sequence it in a manner and let every step mature. You learn and then you apply, move on to the second step.
Okay, thank you. I think I have been asked to do a hard stop now. We're well into lunch, and I'd like to thank the panel for some useful thoughts and perspectives that have been shared. Thank you all. Thank you very much.
Ladies and gentlemen, can we have a bigger round of applause to our panelists and the moderator of the third and the final panel discussion for today. I request the dignitaries to remain on stage as I would like to cordially invite Ms. Vindhya Jayasekar, Chief Executive Officer Designate at the Colombo Stock Exchange, on stage to present our panelists and the moderator with tokens of appreciation. A very big thank you goes out to Mr. Akif Said, Chairman of the Securities and Exchange Commission of Pakistan, Mr. Mominul Islam, Chairman of the Dhaka Stock Exchange, Mr. Aushan Latif, CEO of the Maldives Stock Exchange, and Mr. Badiuddin Akbar, CEO, Central Depository Company of Pakistan Limited, and Ms. Chintaka Mendes, Director General of the Securities and Exchange Commission of Sri Lanka, and also to our moderator, Mr. Rajiva Bandaranaike, CEO of the Colombo Stock Exchange. And we would like to also once again thank Mr. Dilshan Veerasekara for joining 2 panel discussions today and sharing your insights. Can we have a round of applause, ladies and gentlemen? And as we request the dignitaries to remain on stage because it's the final segment, we would also like to invite Ms. Aminath Mohammed Didi, Director General of the Capital Market Development Authority of the Maldives. We would like to present you with a token of appreciation recognizing your presence today. We would also like to invite Ms. Sadiq Bahadur Rao, Director of the Nepal Stock Exchange Limited, and Ms. Sharada Paudel, Officer from the Ministry of Finance, Nepal. I would like to invite Ms. Winder to present them with the tokens of appreciation. I would also like to invite Senior Professor H. Disa Bandara, Chairman of the Securities and Exchange Commission of Sri Lanka, on stage as we move on for a photo opportunity. And ladies and gentlemen, we also have special tokens of appreciation coming all the way from Dhaka Stock Exchange. I would now like to invite Mr. Mominul Islam, Chairman of the Dhaka Stock Exchange, and Mohammad Azadur Rahman, General Manager and Company Secretary of Dhaka Stock Exchange, on stage to present tokens of appreciation to Pakistan Stock Exchange, Colombo Stock Exchange, and Maldives Stock Exchange. I request the dignitaries to remain on stage. Representing the Pakistan Stock Exchange, we would like to invite Mr. Badiuddin Akbar on behalf of the Pakistan Stock Exchange. Ladies and gentlemen, can we have a huge round of applause for these partnerships and the relationships we built with Dhaka, Pakistan, Maldives, and also Nepal. Thank you very much for your contributions. I now invite the dignitaries to pose for a nice photograph. Dhaka Stock Exchange would also like to present the Colombo Stock Exchange a token of appreciation. Let's have a good round of applause, ladies and gentlemen. I now invite the dignitaries for a nice group photograph to mark this day. We also have another token of appreciation to the Maldives Stock Exchange. We invite Ms. Aminath Mohammed Didi, representing the Maldives Stock Exchange. This is Dhaka Stock Exchange presenting a token of appreciation to Maldives Stock Exchange. Thank you very much. Dignitaries, let's pose for a nice group photograph to remember Invest Sri Lanka Capital Market Investor Forum 2025 as they all pose for a photograph. Can we have one more round of applause, ladies and gentlemen? Thank you very much for being a part of Invest Sri Lanka Capital Market Investor Forum 2025. Happy investing as you move forward. Thank you very much for your contribution in making Sri Lanka move forward in the capital market. And thank you very much to Colombo Stock Exchange and Securities and Exchange Commission of Sri Lanka for organizing this investor forum. With that, I would now like to invite all of you for a delicious lunch buffet by Shangri-La Colombo. And soon after lunch, the pre-scheduled one-on-one meetings with Sri Lanka's listed entities will take place at the given times. So ladies and gentlemen, please enjoy your lunch and have a good day. Thank you very much.